Okay. And we are live. How's it going, Ron?
Boy, it's been a week.
It's Friday, Sunday.
Whenever, yeah, like this market, whenever you're like traveling and you're just like a little bit disjointed just because you got other things going on in real life, and so you miss like 3 days of the market stuff and you're trying to catch up, it is like just crazy how much has happened. So, yeah, I told I was reached out to Tevis yesterday when I was traveling back on the airplane, and I'm like, hey, what time are you good for? Because I really wanted to get together with you. We got some probably a few more topics than we typically have for a weekend edition, but we are going to talk about SpaceX IPO, Trump buying, SOFI among other names as well. Not too much SOFI, but we'll talk about that. Gates dumping all of Microsoft and whether we're bullish or bearish on Microsoft, if something shifted there. A lot of stocks had earnings this week. We'll talk about NBIS, and of course, we will hit your Q&A, which is going to be the larger chunk of the show. But let's get into it. Tevis, how are you doing?
I'm okay, man. I recorded a BM&R video earlier today. Dude, it was actually a crazy week. We had like some big work stuff. Um, and it was like an intense work week. But on top of that, there was Nebius earnings and then videos as well that I was trying to commit to for the week. And I just slept last night and didn't put on an alarm, and it was amazing. Um,
That's nice.
yeah, I made a BM&R video earlier today. That's why I haven't changed. It was like 2 hours ago. And
Yeah,
Matt,
I made a video Tuesday, like 30 minutes before I went to the airport, and that's the last video I've made. So and four stocks that I'm in, one just a swing, had earnings this week, and I'm like, oh man, like, but I mean, you can't control when graduation is. So, what are you drinking, by the way? I got
a
the
little
tropical
Celsius.
peach vibe.
Um,
Nice, good
Matt,
choice.
Matt's in Amsterdam. It's 10 p.m. over there. So Matt, if you want to join, let me know. We can send you a link
Yeah, we
over.
can force Tevis to talk some VG because it's insane. It is. Oh, all right. Where do you want to start?
I don't know. Hold on, my phone got. I think somebody's. Okay, hold on.
All right. Well, Tevis is getting that kind of figured out. I think we're going to start then with Donald Trump and insiders purchases, kind of insider of a different variety. A lot of information related to Trump's finances was published, including a massive list of all that he bought and sold and traded in the first quarter. And boy, it is quite the list. He is. Usually, it's better if you trade less, if you do less, unless you're doing like covered calls or some sort of strategy where it requires you to. Uh, he did the opposite. So there are some interesting names on this list. If you can throw this up just real quick, just so people can understand, it's a long published list. You can see page 2 of 113. Towards the end, it's not all stocks. It's ranked in amount from 1 to 5 million for a number of pages. Then we get to smaller amounts, and then finally we get all the way down to 1,000 to 15,000, which is the equivalent of Tevis buying like a penny or something like that of a stock and saying he holds it. So a lot of positions. What stood out to you on this, and what was any of your takeaways as far as him purchasing and buying? Any interesting stocks on there?
The man's a damn DJ, man. I love how so TJ was calling me. Like anybody knows they can just call me on my phone and they'll freeze up my camera because I use it as a camera and whenever I get a call. So yeah, neither Matt nor TJ should call me in the next hour. Look, he's one of us, man. I mean, he was buying Hood, Palantir, SoFi, all these. I'm surprised I didn't see Nebius on there, but I guess that's not really a U.S. company. And the crazy thing, Roy, is to see the gains that he has on all of the positions that he has. It's almost like all these politicians, man. They have some amazing timing. I don't know what it is, but like they have some sixth sense that they're just great timers of the market. And he's no different. I mean, I saw. Let me see if I can pull it up. But yeah, I saw an infographic that was like, "Hey, here's when he bought. Here's his average. Here's his gains," and just insane.
Yeah, what's neat about this, and I don't think it's a requirement for him to necessarily put the date, but it is helpful. It's probably easier to display that way too, is to actually see the date so you know exactly, roughly where that purchase would be within the range of trading in that day. So usually you don't get that. You just have, we bought sometime in the quarter, you can guess whether we're in it or not with traditional disclosures. Now, I do want to address the clickbait title, which I did borrow from you as well, as far as whether he bought SoFi. So let's take a look and see if he did, and see if it's meaningful as well. Can you throw this up? All right, so we're just going to Control F, SoFi, and you can see, yes, this is probably the 1,868th largest buy that he had in the quarter. Between 1,000 and 15,000. So I know that's a little bit hard to see, but yeah, you can look it up yourself. There were some that were like significant and meaningful buys. SoFi is not one of them. So he did, but like don't read too much into it in essence.
Yeah. It was a sight to see, that's for sure. So he can hold the bag with the rest of us. Hey, Roy.
I don't think he's too worried about a SoFi position, but
bro, I was like, having gains changes me. And that's what I've realized this week about my own personality, because NBIS is sending my portfolio to all-time highs, and it's now 40%, believe it or not, of my portfolio because it's appreciated so much. And I texted TJ earlier today, and I was just like, dude, screw BM&R. And then Steve called me like an hour later, and he's just like, freaking SoFi, man, such a dog. And I was like, dude, don't get me started. And so I'm like shitting on all my other stocks just because one of them is up and the rest are not.
To be clear, the stock, not the company.
The stock, not the company. Yeah.
The stock performance. Yeah. In the stock, they can oftentimes be detached. And of course, one of those, you can see a lot of these positions. Some people have crunched those numbers. Trump is up a lot. He did buy a lot of SaaS as well. So Adobe, Workday were some of the largest buys up there too in the top 10. And there was a bunch of others as well. So are you reading anything else into this, or just like, hey?
No, I'm not. I mean, I don't know what to read into it. I mean, it's a very, very, very diversified. I mean, like if he was putting, his entire net worth behind Intel, and the government was also bought Intel, and he's like, all right, Intel to the moon, then I'd be like, all right, maybe that's some signal there, Roy. But if he's buying one stock that we like out of 100 positions, like it's not much you can do there.
Yeah. Especially when it's number 1,800.
Yeah, exactly.
Yeah, mini ETF, more than a mini ETF. It's a broad one. So beyond that, of course, there was a lot of news related to Donald Trump and China specifically. And there's a couple of interesting things that happened related to NVIDIA especially, but also the broader markets. Of course, your Air Force One with Donald Trump, and initially just Elon Musk, flew to China, and Jensen Huang was asked to come. Initially, he wasn't going to come. He ended up meeting them in Alaska, flying over as well. We saw NVIDIA just pump on the news and continue to pump over multiple days, smashing through all-time highs. NVIDIA is no longer a stable coin. And what was really fun, a couple of things with that. So there was a short report. Did you see the Culper short report?
Yeah, I did.
I don't know why, like some people are like, that meme, like, why are you putting me through the hardest test? And it's like, I didn't tell you to buy PayPal or what, that whole meme.
Sure.
Some people always choose the hard road. And it's like, you know what? I'm not going to go up the escalator. I'm going to take the freaking stairs. Or, there's an elevator and I need to go to the 98th floor. I'm going to take the stairs and I'm going to complain about it the entire way, how, it's good for me and is right. These guys seem like that. And a lot of times shorts are. I don't know if I think part of it is they want to attach themselves against a high-profile name from time to time just for that name recognition. And so people actually start following them and tracking what they do, and then they can have more of an impact on future investments. But it seems like shorting NVIDIA is choosing the hard road and is a good way to lose money. Now, I know that NVIDIA fell, but a lot of their argument, there's more to it than what they put on X, and you can read their report. I do respect them because they actually put it out for free, so people can look at that, unlike a certain other short seller. But essentially their argument was, China has insatiable demand for NVIDIA processors. That's the bear case. It's like, wait, what? And they're like, well, no. Like, there's a lot of smuggling going on because they want this chip so much, and China's going to crack down on it more. And there's the others that are being caught, like SMCI as well. And they did report some things that were pretty interesting. Like, I don't know, whether it's true or not, but the one thing they demonstrated beyond a shadow of a doubt is companies in China are desperate to get their hands on NVIDIA and their technology, that Huawei and other internal competitors are not sufficient and not enough. And for me, that doesn't seem like super bearish, especially while Jensen Huang is being flown by Air Force One into China for negotiations. Now, there was a report or a comment by Donald Trump that, yeah, they ended up not working out a deal for NVIDIA, like that they can buy, but NVIDIA, or that China has chosen to not. So the stock did fall some after quite a bit, actually. What was your thoughts with the short report, the China stuff, NVIDIA, all of that?
I mean, we know of another certain bear, which you just alluded to, who also had a short on NVIDIA. And like, I could see it. I could see, I could try to steelman the bear case for NVIDIA, but at the same time, like, I don't have the balls to go ahead and short NVIDIA. Like, why would you do that to yourself? There's so many other, like, I could just spitball 20 other stocks I would rather short than NVIDIA. Like,
Yeah.
why, so I get it. And I'm sure there's the case to be made because people see this big headline number. It's the biggest company in the world, $5 trillion. And is demand going to, fall off a cliff as other hyperscalers start to look elsewhere for their solutions or build in-house in the case of Amazon and others? But at the same time, bro, NVIDIA is NVIDIA. Like, I'm not going to short that.
Yeah, and a lot of these names too, like Burry, are attached to like shorting, like Palantir, for instance. And there, I'm like, well, he is right as far as valuation. It is, I mean, it's an amazing company. They're growing ridiculously. I don't think they're as overvalued as some people think. But I mean, like, you look at the valuation, it's like, well, at least you have that going for you. That seems also hard and probably unwise, but not as crazy as shorting Nvidia. It just, like you said, there's a lot of like very weak, struggling companies that are doing fraudulent or sketchy things, companies that have no moat and are being eaten up alive.
Yeah.
Why not short one of them? And instead, it's like, no, I'm going to. If it's like a wolf, instead of picking on the straggler that is like on the verge of dying and can't fight back, it's like I'm going to go off of the biggest and meanest animal. It's why do that? So.
Well, this is the thing that I don't understand is that Peter Lynch had this whole thing in his book where he said the average investor has an advantage over large institutions because the average investor doesn't have restrictions and they can invest in something when it's very tiny. And if the bet pays off, they will have gotten multiples. Like, so for example, Matt bought Rocket Lab at $4. Rocket Lab's $125. Institutions couldn't buy Rocket Lab at $4 because they have, some type of fiduciary responsibility to the funds that they ultimately hold. And like, nobody's going to stick their neck out to make a risky bet on a small cap company. Now, by that same token, a lot of companies fail in between that journey from $4 to $125, let's say. And for these short sellers, like, I don't know that they have the same restriction, or maybe they do, and I'm just wrong. But like, if I was looking to short any company, I wouldn't pick any of the hyperscalers.
Yeah.
I would pick a company that's under $50 billion market cap because the likelihood of that company being that size, failing to have the proper execution needed to take them to the next level is way higher than any of these hyperscalers who have over $100 billion, just chilling in cash and infinite pockets to take advantage of any, technological revolution wave out there. Like, go short quantum, go short, go short half of these Wall Street bets type companies. Why are you like? If I want to go long, I would go long hyperscalers. And if I want to short, I would short, some companies that are maybe 10 billion or less.
Or go after like maybe something in payments, maybe something in software that you're like, hey, the mode is gone, they're being disrupted. They might really over the next 10 years go to zero. Western Union is one of those that always stands out to me as, not that I short companies, and they have massive buybacks, but that's not enough. The purchase that that they made is not enough. They're probably at some point going to get acquired or go near to zero. I wouldn't short it because I just don't do that, but like, that's easy money. Why not do that instead of NVIDIA? But I think it is just a notoriety, and so people can grab the attention and get back into the limelight. I mean, like, that happens so many times. Like, oh man, it's $15 a share, let's go short. Well, why weren't you shorting it at 34 or whatever?
Yeah. And speaking of shorts, do you think Bill Gates covered his Tesla short at this point, Ron? Because is that why he's selling Microsoft? This is what people are speculating on.
I did see that. I don't think so. I mean, I don't think he's selling because of a margin call or not margin call, but just to be able to get out of his short position. I don't think he's a good investor. Just because you are amazing at creating, making things, you were great at forming a charity, what have you. Gates was good at a lot of things. Does not mean that you're great at playing the markets. And selling between shorting Tesla, which didn't make sense at all because he was for green energy, for the environment. And then also what was interesting is he sold 100%, if you can throw this up, of his position in, I don't know if you heard of this company before, but in MSFT. That's like a little micro cap, isn't it?
Yeah, speaking of companies,
Microsoft, not micro cap. Yeah.
I've heard of Macro Hard. I haven't heard of this other one. So
this wasn't part of the reason why I said, this isn't, probably to cover anything else. A, it's 100%, and B, it's 7.5 million shares. It's a huge part of his portfolio. What's your read on that? Is this him basically admitting and saying Microsoft is under attack by AI? They're not going to benefit as much as they actually lose in this race.
Take a look at this chart. This is a weekly chart of Microsoft, and this is Q1 in this little box here where Gates was dumping his entire position. Now, like, this sort of user kind of encapsulates it. He was selling out during the company's worst start to a year in decades, but on brand for him. And then the original poster said, hey, which came first, the performance or the selling? Because the fact of the matter is that you can have, and I don't know, this might be tough to believe as SOFI investors, but you can have a company doing okay on the company level and just having downward selling pressure on the stock, which could lead you to this. So the two schools of thought are, all right, does he know something and is he selling because we should all be panicking and Microsoft is going to go to zero or whatnot? Or is it that he was always going to sell, right? And his selling alone, because he has such a huge chunk, led to this drawdown. And we actually bounced after he was done selling. That, okay, well, actually, this is good news because now that downward pressure is alleviated and the company will shine through.
The challenge with that is if you look at the actual volume, like, yes, it's downward pressure. It is what it is. But to basically attribute much of that downward pressure to selling 7.5 million shares, the volume, let me look it up again. MSFT stock on just Friday. Well, I might have to pull up my brokerage. But it's significantly times that just for one day. And so over an entire quarter, it's maybe, I think at best, you could attribute the pullback of Microsoft like is 1% because of Gates selling that. Previous to the disclosure. The disclosure, of course, Microsoft dumped when you have your founder and creator selling 100% of his shares. If I was holding Microsoft, I'd be like, wait a minute, what do they know that I don't know? I would be concerned. Like, and honestly, like it's one of those things where, like, prior to this quarter, I was looking at Microsoft as like that's probably a safe place to put some money if I'm holding on to too much cash. I don't know exactly what to buy. I could just put some in Microsoft for a while and let it sit. I don't know about that now. I think that's still the case, but Gates selling all of it, it's like it does definitely get your attention. It'd be like Warren Buffett selling all of his Berkshire Hathaway. You'd be like, what's going on?
Yeah, if Noto sold 100% of the shares, SoFi is going to 50 cents. A little bit different, but I get the point. And speaking of tech billionaires, Roy, do you see who we have backstage?
I can't, but I
Well,
expect I know who.
let's invite him on. He is a newly minted billionaire from his
Bill Gates. Wait, no, not Bill
well,
Gates.
like Bill Gates, except way more handsome and way less evil, Mr. Matt Money.
Gentlemen, how we
What's
doing?
going on, buddy?
Hey, Matt.
Good. Just walking. Sun just went
Dude.
down.
What did you think of those VG earnings?
VG earnings were good. I'm excited that they're outpacing Cheniere, or will outpace Cheniere this year, and are still trading at a discount to Cheniere. So I think it's an interesting time, and I think they're going to continue to grow over the next 24 to 36 months. It's really going to be fun to watch it play out.
Oh yeah. Yeah, that guidance was so bullish. And knowing VG, it's not like best case scenario, it's not even baseline. It's a little bit bearish scenario. And man, thank you for pounding the table on that one long enough so that you and others finally is like, I'm going to start listening to these guys. So
yeah, it was overvalued when it IPO'd for sure, and I always knew that. But just knowing how important of a company it's going to be, it just makes a lot of sense. I mean, I could see a price tag of $50 eventually. That's not talking about next year, people. Whenever I give price targets, it's multi-year sort of stuff.
Yeah.
But if they buy back stock, I could see an opportunity where it could get to $75 a share. So,
oh yeah.
if people have some time, I think it can get to 125, maybe $150 billion market cap by the early 2030s. And I don't know. So I like it, but I'm excited about next decade as well, but we don't have to get into that.
Yeah. So I don't know if you heard the discussion on Microsoft. I'm sure you're aware that Bill Gates sold 100% of his position. Do you have Microsoft? And did this shift anything in the way that you perceive that?
Yeah, it's going to zero. It always has been. No, I'm just kidding. But no, I did during the dip, I did buy it about 359 and change. What was that? End of March, I think. So I have about 200 shares, and I think it's more of a thing where Bill likely just wants to rid himself and end. I do think it's a little bit surprising that he wants to kind of end his tenure. Sorry about that. But overall, I think you have good stewardship, and I think the investment of $150 billion this year is gonna be well received. So it's tough to kind of think about why he would be selling off. I'm not exactly sure. I haven't looked at what other investments his funds have made. So it's hard to gauge where the capital left in Microsoft.
You're muted. That's probably intentional. But...
Yeah, it was intentional. I was done.
All right.
Matt,
yeah, Rocket Lab's doing pretty well for you too. Congrats on that.
That's traveling the world.
Some may say that Rocket Lab is going to the moon, Mars, and Venus.
Matt, does everybody in that square know that you're the richest person around them right now? No.
I'm a small herring in all of Amsterdam.
You could buy half the city.
Yeah, I do love joking to people though. I'm like, when Lambo, maybe one day I'll finally get that, guys. One of these days. Maybe not tomorrow, but one of these days.
Matt and I talk about this all the time. Every single call we have, it's like, dude, quit your job. Go just spend full time.
Yeah, I did have some S&P 500 called away from me And so now I have like 80 some $1,000 is burning a hole in my pocket. I'm like, do I invest this?
Don't say that too loud. You're in Amsterdam.
What are they gonna do? Break into my stuff? But yeah, I'm like, yeah, what do I do with it? I'll probably end
Yeah,
up buying more stock. I'm a loser.
I've got a good chunk of money that air call options ended up being sold at 95 and 75. So it's kind of the same problem of a good chunk of money in my account waiting to buy something. So
Yeah, I got some Amazon called away as well, and also Air on Friday. So I also will be looking to buy some stuff this week.
What are you gonna buying stock, Tevi? Or are you gonna buy more luxurious items? Are you gonna continue the streak?
No, I'm gonna take a break from the luxurious items because yeah, that was that was like a Nebula celebration gift. And now we're back to buying stock, man, and paying off.
Yeah, I need to be more like you. I need to take some advice. What is Maddie finally gonna celebrate? I
Dude,
promised myself I'll be completely transparent. I bought myself, when was this? Like 2019 or 2020? I bought myself a bottle of Dom Perignon. Be like, yeah, when I finally hit that $1 million mark, I'll pop this thing. And it's still sitting. So I don't even know where it's at. It might be on my kitchen counter. I don't really remember. But yeah, I was supposed to pop that thing at some point, but we'll see.
Hey, question from the community asking about Next. I see a few questions, but JJ, thanks for your donation. He said, I want to open a Next position, but I've missed the run up. Would you wait until post Iran?
aren't we?
I mean,
So I guess a broader question: what impact do you think the market's going to do when Hormuz eventually opens up to Next, to VG, to LNG in general? That might be a better way to answer that question.
sorry, what was it? Was Next, VG, and what else?
So yeah, with LNG companies, do you think that there's going to be a significant hit and drawdown when the Strait of Hormuz is open and Qatar is able to start selling to the market actively?
It really depends how long this persists. I mean, if it persists throughout the summer, which I don't see, but I've been surprised it's lasted this long, there's going to be a completely different impact on the market, both from an oil and LNG perspective, than if, and these are all my opinions, I have to state this now, these are all my opinions and not the opinion of my company that I work for. Then if it were to like transpire today and like a deal were to get done today, it would be completely different. And reason being is Europe specifically, more specifically the EU, loads up in the summertime on LNG to be able to stockpile and store during kind of the later months of the year, and basically starts drawing down in late December, early January timeframe. So right now, and I don't know the answer to this, and it's probably some math that I should do, but I know like about 10 to 15% of the LNG supply for the EU comes from Qatar. And so not obviously being impacted, there's a hole, but knowing how much excess capacity there is coming from the US at the moment, I'm anticipating that they'll be able to kind of offset that partly. But that being said, I don't know if they can offset it for an entire summer's worth. So if it were to fix itself today and the LNG facility were to start exporting and getting back to normal, they'll probably still be able to meet whatever demands that they have for next winter. All to say basically that if they're able to get a deal done and things kind of go back to normal, then I would say yes, Next, VG in the short term likely will take an impact and a hit. But what I think is happening at this point is, and same thing with oil as well, the hangover is likely to be a lot more harsh as supplies continue to dwindle. We were in a kind of record, and anybody that's listened to me talk about oil over the past 12 to 18 months heard me talk about how stockpiles globally are high. You're kind of still at a surplus. So there's no way that oil prices would cross north of $100 unless some sort of macroeconomic event or skirmish happened. Well, of course, the skirmish did happen. And then, of course, 20% of the supply of oil is cut off. And then same thing with a very large chunk, 20 or so percent of the world's LNG capacity also shut off. So definitely a skirmish. But we're in a different world now where a lot of those stockpiles are being depleted at a pretty expansive rate. So yeah, I guess it all just depends on what kind of happens. The thing that's going to be more dire is not necessarily the EU, because the EU has a lot of storage capacity in LNG. Korea and Japan have very little storage capacity, so they're more on like I was talking about how the EU has all summer to basically stockpile their LNG supplies or just the gas supplies for use of in the wintertime. Japan and Korea don't have that ability. They don't have the caverns of underground storage that they can use like the EU does. And so they at most can have like a couple weeks worth of gas storage. And so that's the thing that's going to be potentially more dangerous. So to the individual that's asking, I mean, the way I look at it, man, is like maybe this is the way I did it, right? And so when this whole skirmish happened, this is what I did. Doesn't mean that you have to do this, but I think this was like at the end of the end of March, early April as well. I was sitting there. Next Decade was at $8. I don't know what it's at today, but Next Decade was at $8, and I was like, if this skirmish ends, then I could see a world where this thing goes back to $6, $6.50. But I was like, but I can't predict that. And also, I want to ensure that I have the damn stock when this thing kind of comes to a close at the end of the year and actually starts filling out the facility with LNG, keeping in mind Next Decade specifically is pre-revenue at the moment, and within the next 12 months we'll have revenue. So that's a very large step change in the company's history. What the price of the stock will do, I don't know, but it's generally a positive thing to have revenue. So the stock might end up having a significant rally as institutions start to realize, you have to think all the different step changes and when institutions start to buy. It's some companies won't buy a company that doesn't have revenue. Some companies won't buy a company that is losing money, right? So they start making revenue, but they're still losing money. Some companies won't until they're net income positive. Some companies won't until they're cash flow positive. So you have to think all these different stair steps. You're going to have more institutional buyers coming in as the company matures and gets. And so to me, that window is closing. And so maybe you wait, maybe you say, I can get 20% more shares. But the way I look at it is don't pinch a penny, or in this case, 10 cents or 15 cents to miss dollars. And the reason why I say that is this is my price target, not a company price target. I'm completely independent from the company I work for when I say these things. I think Next Decade will be a $25 to $30 billion company. On an upside, it could be north of a $45-50 billion company. And so with only 600 or 700 million shares outstanding, that's a pretty hefty stock price, north of $60. And so you're going to pinch a penny trying to get the stock at, say, $7, like 8 or 9, when it's going to 60. Who's being too smart, right? Don't be too cute sometimes. Sometimes it's better to be down on a stock by 20%. Make sure you have it in the portfolio than being in a situation that I've seen with people in Rocket Lab when it started going north of $10 to say, I'll wait when it gets back to 8. I'll wait when it gets back to $9, right?
Literally me. I did two things wrong. That, and then I didn't do the invest and investigate, because if I had, I would have been in at 4.5. I missed it. So Speaking of revenue, real quick, I thought this was hilarious. It's from this week as well. Oklo, Nate reposted it, but he said monster revenue beat. He said some people like companies with revenue, and they did come in line with their revenue for earnings. Expected was zero, and they did come in with zero, so that was a pretty good read. Another energy company out there, so pretty good report on revenue.
There you go. Sorry, I just broke my neck. Anyway, caught live. What was it? Yeah, Oklo. I'm curious. I mean, I think some of these nuclear plays will end up being good, but
Yeah,
everyone's kind of waiting for the July 4th news for a lot of these companies and the announcement that's going to transpire with that.
Yeah, a lot of these, like Next is closer, like you said, to making revenue. Oklo may be a good investment. I'm not sure. I'm not in it. I think that there's some better opportunities out there for sure. But yeah, all companies start out with zero revenue, and eventually, hopefully, they grow into it. So,
yeah, no, it's a wise words. But hey, I didn't want to come on and take over the stream. I was just wanted to say hello. Appreciate you guys as always having me on. Dude, these people are bumping. I like it. I'm gonna get some shawarma, and then I think we have Rocket Lab Weekly here soon enough. But you guys rock, and appreciate you guys as always. And one of these days, I'll get an invite to Bootleg Weekly, and we'll finally be able to hang out.
good seeing you, Matt.
Enjoy your
Stay safe.
I'm joking with you guys. I'll see you guys next time. Love you both.
See ya.
Love you, man. You're muted.
I was going to say, that was Mr. Matt Money. Millionaire extraordinaire. What is next, Roy? I'll invite TJ here shortly as well, and we'll hear from him. Get some thoughts on our options trades.
A couple other companies, four others that we hold had earnings beyond the VG, the one that I mentioned. Wix, of course, had earnings. Base 44 growing rapidly, and but the rest of the business is actually deteriorating a little bit faster. So on that one, I thought if there was going to be a dip, I would add to it, and I'm like, I think this is one of those cases where I'm just going to hold on to the position that I have, not sell, not add to it, just give it more time to play out. Because my thesis is around base 44, that's growing faster than expected, but the mainline business is deteriorating faster as well. So it's like, well, we'll see. Stock fell a lot, so it's in the 50s now. So if you're looking for an entry and you find it attractive, be sure you review the earnings first, because there was I thought, a pretty valid reason for it selling off. Nudebank, I saw a couple people asking about in the comments. Really good earnings, but the problem with the earnings, it sold off quite a bit as well. They, classically dominating banking and banking activities there in Brazil, expanding well into Mexico and Colombia, even have a license in the United States. But you know what that they failed to do, Tevis, in the quarter? They didn't sell one GPU, zero, the entire quarter. And as a result, it probably deserves going to zero. So, but no, all jokes aside, it's you can look at Mercado Libre, same kind of idea, very different company, same region, similar thought that they're in claiming market share mode. And there was a miss on the EPS line itself. So, it's not completely unjustified. I do think it's overdone. But yeah, regardless, it's one of those where I'll likely be adding slowly into Nubank, but I'm in no great rush. I have a good position as well. Buy more, never retire. That's very nice.
Yes.
Did you use that?
No. I wish I thought of that. You think my
genius.
Brain thinks of that stuff, man?
That's genius. Thomas, if that's yours, I'm going to steal that. So
look, with regards to Wix, one thing I didn't like was their allocation strategy. They allocated all of their purchases at $90, I think was the price, as opposed to, DCAing in. So I'm like, okay, well, you guys, if you knew this was on the horizon, right? Like, why would you buy over 17 million shares at $92 a share? You just wait it out a little bit.
Yes.
And DCA, and you get a way better blended average. So I'm like, okay, well, maybe they're just not the best capital allocators. But then if you believe that, then you're like, all right, well, like, what am I? If I'm not looking for a good steward of my capital, then what the heck am I doing here?
Yeah,
But
I thought that was fair criticism too. Like I called it like it is. Like usually, I don't follow the price action of the stock. In fact, when earnings comes out, I like to review the actual earnings themselves and not focus much on the stock price movement, just because I want to make up my own mind before I see what the market has thought about. I can't always do that, but yeah, I think Wix is still attractive here, but it was a mixed quarter. It was not as good of a report as I thought. With Nubank as well, it was a little bit weaker than I thought. If you look at the quarterly acceleration, it wasn't there. And so I was like, yeah, I get why the market might sell it off, even though I think it's undervalued. I think both probably are. FIGR was one, and then we want to talk about NBIS too, that had earnings this week. FIGR crushed it. They absolutely dominated their earnings, and I want to throw up just a couple of quick things. I probably will do a video, maybe even like later today, on FIGR. Actually, no, I think I've got a. Well, we'll see. I've got some FIGR content coming out. I did do an earnings review and earnings content related to that as far as an article. And I called it basically the up ready for the next leg up. Now, it's got kind of the same phenomenon I think that they're heading into, although they're doing some to dispel this concern that was in my mind, was whether or not they just took a tremendous step up. And there's a couple of reasons why they were able to do that, and then would just plateau for a while. Now, this isn't tremendous quarter-over-quarter acceleration, but there is some seasonality. They're not optimizing for. They're just trying to take market share. They're launching a million different new products. But if you look at it across the board, they're growing very, very well. The CEO said, well, like the founder said, well, we can't always double forever. And the CEO said, well, we've doubled forever so far. So growing 97, well, not 97%. Yeah, it was 97% year over year. So. And if you look at the individual KPIs as well, what they've been able to do effectively, I think in my mind, already previously before, but this is a further continuance of this, they're shifting increasingly over to partner-based branded volume, away from simply FIGR doing it in-house themselves. And so this is the partner, and then this is themselves as well on Democratized Prime. And FIGR Connect itself is just absolutely growing very, very rapidly. Number of partners. The number of partners this is the last thing I think I'll show here. So in essence, they're building a platform. And the way that the monetization, there was a really good analyst question that hit this quarter, which really was helpful. They talked about wells and partners that are onboarding. And of course, there's different size of partners. This is basically companies, businesses, wells, large individuals, not like me and you, Tevis, but like gigantic number of people that are on their one of their platforms. Oftentimes, it's going to be the FIGR Connect, but it usually takes 3 to 6 months after they've onboarded to actually see meaningful revenue. Now, if you look at how fast they've grown, 246 in September, 2 quarters ago, to 387. They talked about, like they had this really good earnings slide. Let me pull up the actual slide because it's helpful here. This will be the last.
When did FIGR IPO? It was earlier this year, right? Or was it
last year? Last around summer, and I avoided it like the plague. Late summer, just because it was one of those, like anything. I tend to not buy the IPOs immediately. I'll wait a little bit. But
that's also something to talk about, that new IPO. But yeah, finish. Do you know what I'm talking about?
Yes. Yeah, Cerberus. And then, yes, let's see, the curve. It was in here somewhere, and I'm missing it. Oh, here we go. So this is what got me really excited, and I think why the market went from initially selling off the FIGR earnings call to, of course, macro helped, but really having a strong week was this, that average partner volume increases dramatically. It actually drives 2 times volume growth 6 months after the FIGR Connect launch. And there's a lot of reasons for that. So basically, with that huge glut of partners that have onboarded in the last 6 months, that hasn't even really impacted the FIGR significantly compared to the number that have onboarded. So basically, over the next 6 months, they should put up some really, really good numbers. It's kind of like SOFI's tech platform. It's a very different product, but in that when somebody onboards, it can take a couple of quarters before you actually see meaningful revenue. Even more extreme right here. So
fire the individual that made this chart. This is absolutely like, can we imprison them? This is chart crime. Look at this thing. What the hell is going on here?
It's okay. Yeah, I mean, they could have displayed a little bit better. They didn't need to do -6, -3. Yeah.
Where is the y-axis? What is the scale? Like, what the fuck's going on?
It's just a graphic to show this, I think, is all.
Yeah. Anyways.
But yeah, that's one. I did invest in FIGR Technologies, and when my initial like pound the table article is at 27, so it's not a double yet. But I do think that this is one where it might chop a little bit with crypto and the financials for a little while, even though they are absolutely killing it. So, any questions or thoughts on FIGR, or do you want to move on to Nebius and then the Q&A?
Yeah, look, I think I'm gonna have open slot in my portfolio and in my heart for a new ticker very shortly, and that could be FIGR among other names. I don't know yet.
Okay. New ticker, but not new bank necessarily.
No, I don't want to buy new bank. I'm mentally done with banks, bro. Don't come at me if you're a bank. I have enough SOFI, and yeah, I'm absolutely jacked by holding BM&R bags in one hand and SOFI bags in the other hand. I'm just getting a great workout in. But thankfully,
financials have been just rough to be in, and that was a lot of my portfolio this year. So I'm up, but not by nearly as much as I would have been if I was even heavier into semis and into Nebius. So Nebius came out with earnings. The stock did pretty well as well. I'm running into an issue now, Tevis. Even though I rolled them out, that's probably going to be the final time that I roll them out unless we see a nice pullback on Nebius. I think over 200, I just can't chase that too hard, and I'll have to content myself with a double in like a month and a half, which is okay. That's a good problem to have. But Tevis has 40% of his pet portfolio in Nebius, so if you think that's a loser portfolio, you need to look up the ticker, or you have it upside down. So just flip it, and then you'll look and be like, oh, it's actually up substantially. So thoughts on Nebius, Tevis? What stood out to you? Why do you think the market reacted the way it did? And where are we going from here?
Yes, I'll share thoughts on Nebius, and then I definitely will cover G Money Super Chat because I forgot about it for like 20 minutes, which is bad. Okay, thoughts on Nebius first. Earnings was terrific, 10 out of 10, fantastic earnings, raising their CapEx, which is really interesting. I think we might get a breather in Nebius stock in the short term because they're going to raise more money. I just want to be clear with everybody watching. I also highlighted this in my Nebius recap video. They need somewhere to, just think about it. They're going to do 20 to 25 billion in CapEx for 2026, not 27, 26. Okay. They need to deploy that capital. So what is just work the timeline. They need to dilute ASAP to get that capital so that they can deploy it, so that they can have, lead time going into 27. I think within weeks we could see we could see another capital raise. One interesting piece that Mark Boroditsky, their CRO, mentioned on the call, Roy, on the Meta deal is essentially it's a backstop. But the cool thing was that they can go and borrow money against Meta's commitment and then use that money to build data centers and then sell for higher. So this is just, I don't know if people understand how crazy that is. Meta said, hey, we will buy $15 billion of extra capacity that you guys have. Okay. Now, instead of them being like, okay, let me sell you extra capacity, or even going one step higher to say, okay, let me sell that extra capacity. Let me increase prices and let me see who buys it. And if nobody buys it, I'll sell it to Meta. They're going one step higher to say, oh, this contract of you buying 15 billion, it's basically like me already having 15 billion guaranteed. Let me take that to the bank and let me borrow 5 billion against that 15 using Meta's name, Meta's credit, because you already it's like a call option that's in the money at this point. right? And then taking that loan from the bank, building something, and then selling it to somebody else for more money. It's just like the leverage that they have is quite frankly staggering. And it's one of the biggest pieces of the story that I think the market is finally starting to realize. This is why it's catching a bid. But at the same time, like NBIS and CRWV are at the same market cap, right? At this point, right?
Yeah.
Now,
Which
CRWV has a lot
does
of
that
debt.
does that feel a little ahead to you? Like, yeah, same. I don't know. Like, you're probably even more bullish on NBIS. I mean, you are than I am. I'm bullish, but yeah, I was like, okay. Appreciate the honesty. So, does that mean that you're actually going to take some profits here, or you're just like, hey, great company, I'm not going to get too cute with it, just hold? And
yeah,
real quick, TJ mentioned in the comments. He said, "Send me the link." TJ, I sent you the link on X again. I think he wants it posted in the general chat, but
it's in his.
then you'd have a billion people backstage. So,
look, what I'll say is, I have covered calls on NBIS that I rolled into June for a crate. Like, they're underwater covered calls, and they're a month out, and I'm still getting a net credit for them. So I don't know if NBIS is overvalued at this point. I think CRWV is just undervalued.
yeah, that's, I think I rolled my calls out for 2 weeks further, and I'll be thinking about over the next 2 weeks, like, I'm going to let those go if we're currently at where NBIS is. If it's above 200, just the reality is it's not worth rolling that for me. And I might just buy CRWV with that position because, like you said, I'm more bullish on NBIS, but I'm also bullish on CRWV. I only wanted to pick one of the names, and like you said, I think it's being disrespected.
Welcome,
hey, TJ.
TJ.
What's up? How are you guys?
Good. How are you?
I'd be doing better if BM&R and SOFI would cooperate. Do they not know that we're an amazing bull run? Like, my goodness.
Yeah.
Financials do not know that. Not at all. Especially
before
crypto.
Before we jump into that, I do want to bring up G Money's super chat because man's been waiting for a while. Opinions on ZETA. I think ZETA also reported earnings this week. Roy, did you have a chance to take a look?
I just saw the headline and I don't even remember it. I was traveling, and since it wasn't one of my holdings, I didn't get caught up on that. So I'll just say I didn't see enough of it to make an opinion.
They did rebound. They're in the high teens now. So the stock seems like it's doing okay again.
Yeah. Yeah, it's for me, it's always been one where I'm like, I think it's a good company and a good opportunity. I just prefer great ones. And I could be absolutely wrong, but yeah.
Yeah, I mean, the reason I didn't invest in ZETA, and by the way, if you haven't seen it already, we do have a great stock tank episode with Wealthmatica who came and talked through ZETA. The reason I'm not in it is because like the space is not that exciting for me. The growth rate is definitely good, and I think they're going to do fine. I think Steve is in it now.
Yeah, he is. You have any opinion on ZETA, TJ?
Man, it is just one of those stocks that I'm just I try to get interested in certain stocks because I feel like they're going to go up. But that, I know it's weird. Because I've said on my stream 1,000 times, the only reason to buy a stock is because you think it's going up. Everything else is all bullshit. You tell yourself. But I have to genuinely be interested in the stock because I'm going to go do some homework on it. And you can't pay me money. Cash out me $100. I'm still going to look into ZETA. I won't even ask Claude to look into it because I'm just not interested. Yeah. I'm not interested in the space stocks. I just say I'm not interested in that space. Thank God I listened to Matt Money and others. Vince is bullish because I bought Rocket Labs in the 4s, and I thought I was great. I was like, hot shit. I sold it over 50. And apparently it had like another 50 on top of that. It's just so hard to hold on to winners that long when you don't do the due diligence, and they're not Palantir, right? You don't learn a lot about the company. They're not SOFI. Like I could hold SOFI to $50-$60 if my thesis is intact that they're still going to be an $100 billion, $250 billion company someday. And that's what's hard about investing, man, is if you don't do the homework and you're not in a situation where you just like not look at the portfolio and you look up in 10 years and you're like, oh my God, I made a ton of money. if you're following the price action on a day-to-day basis, it becomes very, very difficult to hold on to winners. And that's why I don't take on too many tickers, because it's legitimately a lot of work to follow these companies day in and day out, and quarterlies, and thumbing through 10Ks and 10Qs and all this other crap, waiting for Tevis and all you other nerds to post at 13Fs and what the hell they bought and didn't buy, and text from Tevis like, Donald's one of us, bro, like that kind of thing, you know? So I just don't want any more work. Like, I am just getting lazier the more money we have. I want to make the most amount of money while doing the least amount of work. And that's where I'm at. But my two biggest positions are not performing right now, which is SOFI and BM&R. So I'm not participating in this. My portfolio is at all-time highs. But that being said, whenever your data per day is about 50,000, can you really complain, right? Nobody gives a shit. You know what I mean? So I'm just like, I've got this Palantir strangle that I could write a book on, and all the portfolio managers should be asked by their customers, why aren't we doing that for our customers? Because I've been posting it. I've probably posted it 50 times on X, and all it's done is make us $2 million without owning one share of Palantir. So I'll ask people in the chat, how many of y'all have seen the strangle and what's stopping you from participating? Because I've given you guys the blueprint, the easiest money to make on Palantir. I've showed y'all how to do it, and I'm going to continue to show it how to do it. I want y'all to get so sick of seeing that strangle, but I also want you to be more sick of the fact you're not taking advantage of it, because all I do is post it. There's other players on here that tell you what to do, but they don't show you the actual trades. I take you behind the curtain and show you how the cookies are made.
I got a text this week, TJ, like on Tuesday or Wednesday, from one of my good friends, and he watches your stuff, and he says to me, I have it pulled up right here. He says, I'm so happy with strangles. I've never felt this good about options. I feel like it's a no-brainer. And I told him, I was like, TJ knows what he's doing. And he says, like, he gave me this whole paragraph around like, you know, and he ended it with like, I now truly understand why TJ is doing what he's doing. So you have some people out there that are listening. I'm just, I'm like still in the dipping my toes phase, you know?
Yeah, it's tough, dude. And I paid a lot of tuition. So thankfully I paid the tuition, and I don't want my viewers to, because you have to learn your buying power constraints. Like, buying power is oxygen. So I was playing too big with Google, Apple, and PayPal, and got my butt kicked. But then I figured out my parameters, and I was like, okay, so I call Palantir the tuition trade. When I go lose a few $1 million over there, and then I make it back on Palantir, and I'm adding it in the book, actually. So I had to postpone the book like 6 months so that I could put the Palantir journey on there, and how it, Google, Apple, and PayPal taught me what I could and could not do on the Tasty Trade platform, as far as like pushing the envelope, because I'm really pushing the envelope. And then I had to go to the stock that I understood the most, as far as not just from a fundamental perspective, but also how the stock trades. Like, I am familiar with it, you know, like I'm familiar with it and the valuation, and I understand the bull argument, and I certainly understand the bear argument. And it's so beautiful when you look at the options chains, dude, because there's so many people that believe this thing should be trading over 200. And there's even more people that believe that it should be trading under 50. So he just created the perfect situation for the short strangle, because you could be real wide, way out of the money. And there's so many people willing to give you that money. They're buying insurance on both sides. You
go really far out though on your strangles, right?
On Palantir, you have to be, because she moves. She moves, doesn't she, Roy? she moves. When she decides to move, she's real violent with it too. Like, she packs. She's like my wife. She doesn't just pack like she's going for the weekend. She acts like we got kicked out of the house. Yeah. I mean, when she moves, she really moves. And it's called the path to pain, right? Like, I can give you all some gold here right now, because I don't want to take over the stream, but I'm going to give you all this thing. When you're selling puts and calls, it's called the path to pain. You could be way out of the money, but there's other factors that can go against you in the short term. And you look up and you're like, why am I getting my butt kicked on this position? I have a naked call on Palantir at 220, and I look up and I'm down 10, 20, 30% on that position, and Palantir's trading at like 150. Is because there's this thing called Vega, implied volatility. And if there's a drastic price movement up or down, it's going to follow by an expansion of Vega. And that's going to hurt your option. So you need to have enough buying power to absorb that cushion, because if Vega expands, your buying power is going to compress. And that's like oxygen for you. So essentially, these brokerages are not really your friends, man. Like, I don't care if it's Tasty Trade, Robinhood, Webull, and it doesn't matter. At the end of the day, they're there to make a buck for them. They're providing you a platform to go do whatever you want as you please. And I'm cool with Tasty Trade, but I know that they're not my friends. They got a business to run and I got a business to run. So I have to work within their parameters. And if they don't like my risk profile, they're like, you need to shut that shit down. You know what I mean? Because we're not going to allow you to blow up the account, because somebody's going to be holding the bag and it ain't going to be us. So you got to learn what you can and you cannot do if you're going to sell options, right? Like, you got to learn all the gimmies and the gotchas, as Dr. Jim Schwartz says all the time. Dr. Jim Schultz, shout out to him. I feel like I've learned from him, even though I know him personally. I've learned the most from him as far as when it comes to selling options. On for every gimme, there's a gotcha, right? Like, if something looks real good for you, but also looks really good for the counterparty. So you got to have both points of view, if you will. But
yeah.
I'm excited, man. But I feel like Tom Lee. I'm wearing a lot of egg on my face right now, and feel like I've lost a lot of credibility, because the only thing I have to rely on is the $50,000 a day in theta, which sounds like a lot, but it's not really. If I would have just pumped $2 million in NBIS, it'd be different. Like, you know, that's the reality. Or was it AEH, or I don't know what the hell is that one ticker that Roy's all on?
Air Test Systems.
Yeah, it's done well.
I mean, there's so many other tickers that are Micron. My goodness, Micron, SanDisk. Like, there's so many that are just like, they're there. They're early for the party. They're there. They put up all the balloons on the chairs. Everybody's having a good time. And my stocks are like late for the party. You know what I mean? Like, they're just not participating. But I know that they will. I just don't know when. So I want to encourage people, if you are bag holding, but if your investment thesis isn't broken, in order to eventually become a bag holder, you have to learn how to be a bag holder. So your time will come. Your time will come if the company is not broken, and we're just talking about a broken stock. So, Roy, do you want to educate them on that? Because I feel like there's so many people that don't understand the difference, dude. It's a mirror, and sometimes the reflection is just not accurate. It just
most people, you know, and even like the social media platforms kind of operate this way. They just look at the share price, and so earnings. Like, I won't look at the earnings. I'll just look and see what the reaction is.
Hey, baby.
And that's a mistake, because the market does get it wrong. Algos do get it wrong. Algos sometimes don't like one number, and then getting the underlying, people are like, oh, this is actually like really bullish. You can't always read, even if a stock is pumping, it didn't necessarily mean it's going to have good earnings, or it's even sustainable. But when you have a company that is gaining market share, they are executing at a high level. They're not just growing, but accelerating into that growth. And the stock is cut in half for whatever reason. Well, maybe the stock was ahead of itself. That can certainly happen. It doesn't mean that it's going to be a bad long-term investment. It just means it takes a while. And what tends to drive a stock over a short term is not the fundamentals. People get that wrong. Fundamentals are important over the long term, but it's a narrative. And so if the narrative on something shifts, or it's caught up in a narrative that is accumulating rapidly, NBIS is, and like 2 months ago, NBIS was the other direction. It's like all these companies are just diluting endlessly, or they're taking on debt. CapEx is just ridiculous. They'll never actually make money. And so it was getting chopped to the point where it's $70 a share, actually slightly under. And now it's past 200. And Tevis and I both agreed. It's like, okay, it's ahead of itself. Air Test Systems, same thing. I still think it's ahead of itself. I was okay, you know, selling the shares that I did as a result, but the market tends to overreact over both ways. And so right now, I think SOFI and a lot of financials are in that, where market is not interested in those right now. It's, you know, they could post the best earnings ever and still get sold off in some cases. Now, some of them, there are fundamental reasons for that, and there's issues with what's happening with the company. But for a lot of them, it's not their time. I do think, and I wanted to ask you guys this, do you think that crypto, like BMNR specifically, a lot of the fintech and financials as well, that have not been performing well, even if their businesses have, do you think that they get a bid at some point this year? And what do you think the catalyst is?
Yeah. You want to take it, Tevis? Because I have a couple crypto junkies I talk with daily.
Yeah, I mean, look, I think from a macro perspective, the ball we've all been tracking has been clarity. And this week on Thursday, it passed the Senate Banking Committee. So it would go to a Senate vote and then back to the House to get ratified and then get signed. And we saw this week that it was largely a sell the news event. I mean, BMNR was down 10% on Friday. Ethereum was down like 8% this week. And that's fine. Like, you can have a sell the news event after your stock has rallied, but we're having them when we're at, all-time lows. So I do think that clarity passing will help because it will allow all of these institutions to have a green light to start buying in. I also think with Ethereum being so small, like, there is going to be market manipulation. I was reading this entire post around how Jane Street moved from Bitcoin to Ethereum now with regards to their antics, let's say. But I mean, look, I think BMNR posted this in their last update. Their whole technical criteria for crypto winter versus crypto spring is 3 consecutive months of like green, essentially. And if Ethereum is above 2100 by the end of May, that would technically mark the end of crypto winter. And I don't know. I think as the market goes more risk on, I mean, we've been talking about this, Roy. I'm sure we might have a pullback with Kevin Warsh that just got nominated on Friday. We might have one in June or maybe July. But I think the path looks fairly clear for the rest of the year. That might just be being optimistic because I want to believe that. But I see a lot more institutional money plowing in. And I see a lot more adoption from a transactions perspective. And I think the thesis of stablecoins plus agentic use cases on the blockchain plus tokenization is still intact on the macro view. I mean, the price is going to be the last thing to cooperate with something that's so held down in the short term. But ultimately, I think we can get there. It's just not going to be a straight line up.
I want to ask you guys
beyond what you guys said. We have seasonality with midterms, seasonality as far as crypto not performing well in September, kind of seasonality as far as the 4-year cycle. I would be a little bit surprised if we get to the fourth quarter and we don't start seeing by that time financials, fintech, and crypto performing quite well. We probably bottomed before then, and I think it's some of the names we've already bottomed. But yeah, I've always looked at like BMNR, for instance, when I got into it, as at least a 2-year play because I wanted to give enough time to digest a crypto winter, which is exactly what we got. So kind of wish I'd not bought where I bought as heavy as I bought. I did average some on the way down, but I am looking at buying here, not necessarily this month, other than FIGR Technologies is probably the only fintech and crypto name that I'll touch. But in June or July, I think I'll start adding to some names and get more aggressive with it as we approach September.
I like to ask Dr. Roy a question. Roy, congratulations, by the way. I can't even fathom the work involved to be a doctor of anything.
I appreciate it. Yeah, that's where I was, by the way. I was walking at graduation. My parents, they were like, hey, we'll support you no matter what, but we'd love to see you walk. I'm like, I can do that for you. So they've been amazing. So. That's
awesome. Anyway, congratulations. I've met Roy personally, guys. He's got a beautiful family. It's just such a huge milestone in life. What a flex. I mean, just what a flex too, just to be able to say that. But more importantly than having professional accolades is just being a good all-around person. So anyway, thank you for being you, Roy. But I want to ask y'all something because I had a mentor call today. And my dad was sitting there, and I'm blessed to know someone who's taken his account from 20 million to over 100 million selling naked strangles.
Wow.
And he asked me something today that really, I feel like I've already kind of been doing it over the last 90 days or so. But it's like, if you wouldn't add to a position today, why is it still in your books? If you're adding to a new position, but you have a laggard on the books, are you more interested? And it took me like an hour. He was like, he hung up on me. He goes, I want you to think about it and then call me back because I really want you to think about it. If you have a laggard on the books, Are you more interested in not booking a loss because you don't want to wear that? Like you don't want to have like, it's like a scarlet letter is what he used. You don't want to be known as the guy that lost money on X stock. And you could have moved that money into something that's already working. Or are you just going to leave it on the books so that you don't have to deal with it? And then you're like, oh, I'm a long-term investor. I got X, Y, and Z mindset. But you're pumping new monies into another stock. Because what is the objective, kid? Is the objective to make money, or is the objective to make money while not having to admit, because you're transparent on your channel, that you lost money along the way? Because sometimes you're going to get them wrong, but don't lose sight of the overall objective. And that is what helped me climb from 20 million to 100 million. Because I'll tell you what my objective was. My objective was to get to 100 million, and I didn't care how it happened. And I didn't care what stock contributed. I was not married to anyone's stock. I was married to the process. And I was married to the goal and to the objective. And I've heard you say on your channel, and I was flattered because I know you watch this channel on a regular basis. I've heard you say that your favorite ticker is your portfolio. So make sure that every action that you take validates that.
Yeah, let me do a quick answer.
Who wants
for me
to,
anyway.
who wants to take
Tevis,
that
if you
one
wanna do
on? Because I was, I thought it was a tough one for me. And I'm
if
not
you want to do a
about
more detailed, so 3 reasons why I wouldn't be adding, but I still want to have it. One is weighting as far as like heaviness. There's times when, like for me, certain stocks I'm like comfortable with this percentage of allocation, and when it's fallen, you know, I can add some, but at a certain point, I'm like, okay, do I have enough of that space, which is the case with SOFI, and also weighting with SOFI as well. Another is actual weighting as far as time. So Wix, it's a swing trade for me. Thesis was basically around base 44. That reported incredibly well, better than expected. The actual more mature business, worse than expected. So I'm like, you know, it needs more time. I'm not going to add. I like where I'm at right now. I think that the thesis is still valid. But yeah, those are the 2 main reasons. And then the last one is just tax implications.
So let me add my 2 cents here. I think, like, I agree in principle, TJ, but I think that doesn't tell the whole story. So if you pigeonhole everything in your portfolio under this lens of you either have to be buying every day or selling every day, it doesn't account for, you know, like, so for example, for SOFI, I'm fully built out on SOFI. And if I bought any more SOFI, I would feel uncomfortable because it would be too big of a percentage of my portfolio. If I didn't own it today, I would be a buyer. Same with BM&R. If I didn't own BM&R today, at 19 bucks, I would be a buyer. I believe in the thesis, but the market decides the timing. And so for me, it's just like, yeah, the reason I'm not buying today is because I'm already fully allocated. And with BM&R, it kind of sucks because to Roy's point, like, I wish I had averaged down. The market turned around on me, but the thesis is still intact. So I think, like, if I didn't own it, would I buy it at 19? Yes, absolutely. But I would have it be, you know, 2% of my portfolio as opposed to 8% of my portfolio. So I do think there is a middle ground, just waiting for your thesis to play out. Like, I sold a bunch of stuff in December for tax loss harvesting reasons, and it wasn't anything I was married to. I didn't really look back on any of that stuff. And Roy, we talked about that on the pod, what we were selling. But the stuff that I've held for quite a while, like SoFi in particular. The Metas, the Amazons, like, I'll call out generally when something is a trade or a swing for me. Roy remembers last year, I mean, I swung Apple for a couple of months and then I sold that. HIMS, we both swung and we got out of that because the thesis changed. But there are some that I'm more married to than others. And the reason is because there is a disconnect between what the stock is doing and what the fundamentals are showing. So same for SoFi, they're executing and the stock is not doing jack shit. Same for BM&R, the ecosystem is growing in terms of adoption, but the stock isn't doing anything, neither Ethereum nor BM&R. And so those are the ones that I feel I get more hung up on because I don't think I did anything wrong in my analysis. Or maybe like the market at the end of the day doesn't care. You know, I could be holding SoFi for 5 years and it could be completely stagnant. And somebody who's done zero research can buy it the next day and this thing can go up 5x and they just caught it on a lucky day. And I lost out on the opportunity cost. But at the end of the day, it's like, if I don't give it a chance to run, and I always cut ties because of the stock price, I'll never get anywhere.
Agreed. So I had about an hour to process. You guys only had a minute, right? So I had an hour to process. And I said, I think that for me, it has to do with whether or not it's a trade or an investment, because those are two totally different things for me. And SoFi is an investment that I've learned how to trade options around. So I've been thinking about this a lot. And what I've done probably over the last 90 days is when the stock's just not moving, I look for the most capital efficient way to have the upside exposure. So he talked to me for a while because I mean, we had a long drive this morning, and he's like, buy leaps, own those leaps for 30 days, 31 days. That way you don't have the wash sale implications, and you can repurpose those monies and free up a bunch of buying power to move more monies to what is working, but you still want that upside potential because your thesis isn't broken. Because you have to become a better allocator of cash. That is the objective. That's what's going to get you to the promised land. So if you have a lot of money tied up to a stock that's just not working, he's not saying cut ties. He's saying restructure the marriage, if you will, so that you can maximize the dollars working efficiently for you. And that he's not saying like, hey, this stock's not going up tomorrow. Don't sell that because that's just stupid, right? Because you're trying to time the market and you're just it's a losing game. Ultimately, it's going to be a losing game. But he's always like challenging me to be more capital efficient. And I sold the BM&R shares and I bought the leaps. And I stopped the bleeding, and I'm still getting the same cover call premium against the leaps versus against the shares. But at the time when I sold those shares, it was 100% buying power reduction on owning the shares. Now it's come down some, right, on Tasty Trade specifically. But it freed up $1.3 million that we could use elsewhere while still maintaining the exact same upside exposure. And he's like, and if the shares aren't going to work, and that's a delta of 1, you're better off not having the leaps work, even though the leaps expire worthless, because you have all of that other money that you could have put in the NBIS of the world and stuff. So again, that's why he's been able to grow to 100 million and I'm stuck, right? Because there's people that just know how to do the thing better than you because they've just been doing it longer and they've grown along the way. And I'm real thankful to have them in my life to get the constructive criticism. And it's hard, man, whenever you feel like you kind of already accomplished something. It's hard to like have somebody slap you around, if that makes sense. But sometimes it's like growing is painful, right? As a kid, you know, you're growing, like, I never had the growth spurt, but if I had it, I would assume that it would grow, it would hurt. But I got stuck at 5'8", 5'7.5", but I claim 5'8". But painful, like growth is always painful, you know, and it's painful right now watching everybody. I feel like that kid, like I'm gonna give you all the analogy. I'm the kid that's in timeout, but they put timeout outside so you could see the kids playing in the sandbox. So it's more painful. Whereas if you don't see it, it doesn't hurt as much. But we're out there and we're looking through this glass little pane and we're seeing all the kids that playing. They're having a badass time. But I know that our time's coming. Like I know that my time's coming. I know that hope isn't a strategy either. So I'm actively selling puts and calls in other areas that are working. What stocks do you have right now that we haven't already, that everybody on YouTube isn't talking about? Because I just recently sold a strangle on Micron, and I don't know why I waited so long to do it. Because I'm afraid of the ticker because I've seen the chart and it's just gone parabolic. But now I picked a strangle that I'm like, I literally don't have to look at this thing, and I'm pocketing quite a bit of money on this thing. What stocks do you guys have that's like the new blood, right? Because we all suffer from that shiny object syndrome a little bit.
Probably FIGR for me, FIGR.
What is that company? I've heard you talk. What is it? Is that robotics? Like what the hell is that thing?
No, that's a different company. Okay. FIGR is a ticker. The same founder as who founded SoFi founded this company. And the easiest way to explain it.
Cagney? Is that his name?
Yeah. And the easiest way to explain it is basically there's not a lot of companies that understand and do well with traditional finance and also understand how to leverage crypto. to make things a lot more efficient. So they've done that not only just for themselves and their own business, which is how they got started with HELOCs. They went up to a lot of banks. They're like, hey, we built this platform. Here's what we can do with crypto to make things so you can actually settle these HELOCs in as soon as 5 days and save a lot of money, a lot of time as well. Nobody can compete with you if you do that. Banks are like, hey, that's great. We'll be the 10th to do that. So instead, they are like, hey, we have to actually start with doing this ourselves, proving out the concept. They've already done that. And this platform that they built, it's not just HELOCs. It's the first lien market that they're going after now. It's their on-chain private equity network. It's democratized prime, which is for basically democratizing prime credit, prime lending opportunities there. And everything that they do is with blockchain. And so some of what they do, I'm like, I don't know if that's going to work. It's cool if it does, the on-chain private equity network. But some of it, I'm like, yeah, they're absolutely killing it. They're going to dominate this market. And I'm not sure who can actually compete. And the great thing is it's becoming every single quarter more and more asset light. Like they passed a while ago when more than half their revenue is coming from just partners using their platforms. A lot of expansions in the space, a lot of stuff that they're doing. Not too many irons in the fire yet, though that is one of my concerns with it. But and they're growing like 100% year over year.
Wow.
They're not profitable, are they, Roy?
They are.
I just
They're
saw a P ratio of 52 or something like that.
They IPO'd as profitable. And the way that they talked and thought about this was they're not optimized for EPS profitability. Most companies that are growing 100% are not. But they're about taking market share, expanding TAM, and so forth. But they're accidentally profitable. Like their business and the way that they've been able to leverage their own cryptocurrency yields, which is the first SEC registered cryptocurrency. It is considered a security there as a result. But regardless, like it's just a very differentiated company that understands crypto and understands traditional finance well, and so they're disrupting a lot of the spaces. So I'll have some pretty interesting content coming out by next week, I would say, 1 week from now. Very interesting.
So was Cagney at the helm of SoFi when they were dealing with all the sexual misconduct and all this?
That was him.
That's why Noto got the job, right? Noto, they needed an adult to run the company, essentially.
Well, yeah. Like I think that obviously Cagney, where there's smoke, there's fire. I'm not saying he did or didn't. All the allegations are true, probably not. But there's a reason why he's no longer at SoFi. And there's also a reason why he's the founder or co-founder, but not the CEO of FIGR. And instead they brought in Mike Tannenbaum, who was originally with SoFi. He then was with Brex, I believe. Really, really like the CEO too. I think that's like the ideal type of structure that you want to have. So, yeah.
He's a smart dude, though. I mean, Stanford, my wife's Stanford. We're team Stanford. By the way, I say this. I don't say this a lot, but one of my core investment thesis is to find companies that were founded from Stanford alumni. There's just some really nerdy people over there at Palo Alto.
Except for Nubank.
Fuck that guy. My wife's DMing that dude. I'm so proud of you. Fuck that guy.
No, that's one of those cases of broken stock, not a broken company at all. Like they're growing 50% year over year plus for revenue, 60% EPS. But
I don't think Roy knows the lore, TJ.
Oh, I do. TJ has shared with me about.
There's this real handsome dude that founded Nubank, right? And my wife knows him from college. And she's like, oh, he's such a nice guy. I don't want to hear that shit. I've seen his picture. Shut up.
Yes.
And he happens to be worth a couple $1 billion now, right? It's a few, more than a couple, like a few. So anyway, that is called being in a new marriage and not being totally secure yet. So I will never buy one share of Nubank. I don't give a shit how well they do.
There you go. Before we get in the Q&A, there's one last topic that we had at the beginning was SpaceX IPO. So Tevis, do you want to kind of mention the news around that? Because there's a little bit there and introduce the topic.
Yeah, I mean, look, we got more details around SpaceX IPO. It seems as though they're going to IPO on June 12th, and they're
Wow.
expected to raise about $75 billion, which is kind of crazy. Let me put it in the chart for you guys. This is 2.5 times larger than Saudi Aramco IPO back in 2019. And I saw BlackRock wants to put like 5 to 10 billion in it, and it's gonna, yeah, $2 trillion valuation. Uh, quite crazy. They are also doing a 5-to-1 stock split.
Wow.
So yeah, this is gonna be kind of a wild month. I mean, space stocks have been lifting off on the back of SpaceX going public, but yeah, it's going to be a crazy time. Elon, trillionaire, like locked in, locked in.
Wow.
What do you guys think? You buying this, TJ?
I just, that is the reason that I started selling Strangles, guys. I'm a permeable. Like, I am a very optimistic person. I don't care what happens in life. I try to find the good in everything. But I just can't. Maybe I just forgot to do arithmetic, or maybe I just need to learn how to value companies the new way, because the old PE, PEG, PS way, that math doesn't math anymore. And I just don't understand these valuations with these companies that have negative free cash flows and having valuations in the almost $1 trillion range. So I just feel like the market is extremely frothy, and it scares me. It scares me, the valuation that some of these companies are getting, because I feel like that is how bag holders are created. And I just don't want to be part of, there's like one rule to investing is don't lose money, right? And then rule number 2 for Warren Buffett is, see rule number 1. Well, I think rule number 3 should be, don't be anybody's exit liquidity. So when these private companies are going public, and I feel like, they go public for one reason, guys, to raise cash. That's what they do. They're literally selling themselves share by share to the shareholders. That's what going public is in layman's terms. I just don't like the idea of being an exit liquidity for these companies. And you're going to see, after the lockup period, you're going to see a bunch of these shares being sold off to people like you and me and whoever wants to participate. I was listening to the chat earlier as I got home, and I think I heard Roy say, or I'm thinking it was Roy, that he typically doesn't participate in IPOs right away. Like, I would highly recommend, just as a solid human to human, not financial advice, human to human, let the dust settle and see what's what, because these things could have like serious 30, 40, 50% haircuts. I hearkened to Hood. You remember the euphoria with that IPO? It took people 2 or 3 years to be whole from that IPO. I was a sucker for the Facebook IPO.
Here's one that's more recent, TJ. This was this week, man. 2 days,
whatever you call it, whatever. Yeah.
385, and now it's 279.
Yeah.
It's just this is the trend with all of these IPOs, and yet people still pile into them on IPO day.
Yeah, and there are some that are, just playing with existing shares that they got, quickly. They're just around it for a trade, or they're even willing to get banned from being able to get some IPOs just from being able to sell like within that first month. But yeah, I tend to. There will be some where I'll just play it, just for, it'll probably be higher in a month just because the nature of where we're at in the macro. But it's like with fun money. It's not anything serious. But there's companies like VG, for instance, was one where the IPO was not like super hyped but it was one of the larger IPOs last year, January. IPO, and it was hot. And I was like, I wasn't even looking at it at that point. And even with something like VG, almost every single company, I'd say like 95%, you can probably get at a cheaper price 3 to 6 months later. It's not a guarantee, but it's extremely likely. So, but like one thing that I'll say is there are some that are say, you know what, I just want to have some shares just in case this thing gets silly. And I think it's a great company and I want to build around it. And if I'm getting an opportunity, that's not a wrong approach at all.
Right.
Just something that actually attracts your attention, the invest and investigate. But I wouldn't go like all in on IPO day unless you're just trading.
Yeah, there's also this downside, this possibility as well. Like if SpaceX merges, I mean, when SpaceX and Tesla merge, because I think at this point, like it's very clear the strategy with Musk wanting to amass as much voting control as possible in Tesla, and he can do that inadvertently through merging it with SpaceX. You know, because he owns like what 48% of SpaceX. When that happens, this will be, Roy, one of the largest companies in the world, because like if you have an implied IPO of $2 trillion, you're already like cracking the top 10 biggest companies in the world on IPO day. You know, like this thing on IPO day, it might be in the, you know, in the top 6 or top 7 largest companies in the world after that pump.
Is SpaceX profitable?
No.
They're barely yeah, I'm not sure.
I'm just saying, does that? I mean, dude, the Palantir valuation scares me, but they make mad free cash flow. You know what I'm saying? You gotta give them props for something, and they grow pretty damn quick.
Yeah, they're profitable, but only 15 to 18 billion dollars, $8 billion of EBITDA
on $1 trillion value, or 2 trillion. What is the valuation?
$2 trillion valuation, bro.
Dude, I mean, guys, y'all don't think that doesn't scare you? Like, I mean, it just feels like a gum that I used to chew. It's like Bubblicious as a kid, I think is what they called it. It just feels very bubbly. It feels bubbly, and we're not talking champagne here.
I wouldn't touch it. I might like try to get a couple of shares, you know, just for fun on IPO day, but like nothing serious. And it's an important company. It's a great company,
sure.
But it shouldn't be a top 10 market cap company in the world as it debuts. I'm sorry, it's not even close to that. So I think what my concern is that some people will go hard into it just because Elon Musk and just say, hey, don't bet against Elon. It's going to the moon, and maybe eventually. But I think a lot of people will get caught and they'll hold the bag. And I'd love to be wrong, but yeah, I'm not going to touch it until it gets, like, if it has a big pullback, you know, I'll revisit, you know, 3 to 6 months. We'll see, but yeah, I'll let it go.
Yeah. So, I mean, does it get with Tesla? Like, how does that, because that was a whole chatter I would see, like, because it owns X, right? Like it owns Twitter or whatever.
That's the funny part. TJ.
I don't even know how it works anymore. Like it's in my too hard pile. All of it is.
Yeah.
Yeah. I mean, they own Twitter and they own XAI, and they're changing the name and the logo and everything. But that's the funny piece. And I think, I don't know, a little bit, you know, funny to think about is that Twitter went private in October of 2022 when it was bought for $44 billion. And who would have thought that in 4 years later, less than 4 years later, it would go public again at $2 trillion valuation. Like the amount of accretion on Twitter. Now it has an entire rocket company attached to it, so I kind of get it. But yeah, a full round trip for Twitter.
I would say more than just attached. That is the company is SpaceX, and Twitter happens to be attached, or X.
Yeah.
I don't know.
Yeah,
man.
it won't be touching that. Are you guys ready to do you want to do Q&A with us, TJ? We're about to
I've got a few minutes if you guys will have me.
Yeah, let's do it. All right, we got 26 bookmarked right now. If you guys want to ask more questions, and definitely go ahead and ask them. Let me see if there's any other super chats that I ignored. Thank you so much for becoming a member. I am really bad at throwing up member stuff today. Thoughts on Wix? Are we adding or buying? It's interesting.
I'm holding. Base 44 performed very well at the earnings call. The mature business did not. I still think it was an okay report, and so I'm going to give it more time.
Yeah. Yeah, no, I think Wix is interesting. I might buy a small amount at this valuation just because base 44 at 150 million is still a drop in the bucket. I mean, look, this business, first of all, it's 150 million ARR, so annualized. But this business is doing like what, 2 billion in revenue, more than that. So But the rate of growth for base 44, I think, is going to become more and more of an impact as we go further down in 2026, especially because they're like actively leaning into that more heavily. So that, along with buybacks and the valuation being where it is, along with the core business, I mean, they grew what, 10%, 11%. It's still, they're pricing it for freaking bankruptcy over here, man. So I think it's compelling. I definitely don't want to ape into a large amount, but I'm getting a good price for it. I'll just say that much.
Yeah, 14.3% revenue growth. So yeah. And base 44, the number is 150 million annual run rate from not existing last year.
Yeah, and up from 100 million at the end of March, and up from 60 million at the end of 2025, which is December. So like every couple of months, this thing is going higher and higher. And I think they also talked about on the earnings call, Roy, that they just announced the agentic AI as well. So I think that's going to accelerate the growth of base 44. Something to keep an eye on.
I like that, and I like how it fits in the ecosystem, but I'm going to give it more time. And I'm comfortable, like, if the thesis becomes even more bullish, 3 months from now, let's say, hey, mature business looks like it's stabilized. Base 44 is at 300 million annual run rate, and then the stock's at 75. It's like, okay, and there's things in the earnings call like, okay, yeah, this is much stronger than I expected. I'm comfortable buying higher. It sometimes makes sense to just say, you know what, I'm going to wait, or I'm going to wait to add. I'm just going to kind of see how it plays out versus going all in. So, yeah.
Thank you so much for the donation, Highland. Chat is fire. SOFI is a buy right now. I think for me, it is a buy right now. I mean, you're getting a good price. Obviously, the tech platform is not what we want it to be. And this quarter was made it very clear. But overall, and especially now with the Clarity Act, if that passes from a stablecoin perspective as well, I think it's going to be an underrated boon to their business. Yeah, I personally think it's a buy.
Very, very agreed.
Are you guys real bullish on the whole Latin America thing? I caught like half of the Tim Sweeney and Steve. Steve, Tim Sweeney, obviously he's our new data-driven investing, right? Since we lost Chris, the corporate. I mean, is that really going to be that big of a vertical, or is he being a little overly optimistic?
I think if you're looking at super long term, it could be. I wouldn't ascribe any value at all to the SoFi investment currently. There's a lot of execution and a lot of competition. Too much where I would just rather look at that as a free call option for the long term. If it plays out, great.
Yeah, I also think like the Latin American folks, they're not high ROI type of people. Like the average revenue you'll make from somebody in Latin America is nowhere near the amount you'll make from somebody in the US. And so that's also something you have to think about. It's like not all users are created equal. And that's just the case.
All right.
Okay, let's move on. How long do you think it'll take before sees meaningful revenue from their crypto and crypto as a service business? I don't know.
This is a reference to SoFi.
Is this SoFi?
Yeah.
Yeah, you guys have to put tickers because it's probably been like, I mean, he asked us at 4, so it's been 2 hours since he asked. He's probably gone. Sure, let's just assume it's SoFi from Tim here. What do we think?
Probably at least a year. The reason why is we're waiting on Clarity Act before you see meaningful adoption on that side of the business. A lot of businesses might see the advantage, and frankly, SoFi is positioned very well there, but they tend to wait to do more than just play or dabble on these long-term decisions until there's a good understanding of what's going to happen with regulation. And until Clarity Act passes, we don't have that. And then there's always a lag time because, just the nature of that pipeline.
Yeah. What do you think the next sector to boom is? Robotics, rockets? I think those are the sexy sectors that, like, if everybody's thinking it, then you're probably not, like, yeah, you could find alpha, but like people are already in at the ground floor on those. I think energy was one that I've been talking about for a little while. Yeah, I'm not sure. I'm looking at these like not so front and center industries that are complementary to AI. Like, did you see in our group chat, Roy, where one of our mutual friends posted like actually, let me bring it up, a full chart around like the stocks associated with the AI trade, and half of them you haven't even heard of. So he's talking about the photonics value chain. It's like, oh, you've seen air test systems, but you haven't heard of most of these, I would say. But yet, I would guarantee you, if we looked at the stock charts for all of these, like the majority of them have caught a huge bid.
Yeah.
So one way to think about it.
Yeah, no, I like energy. I do think fintech and financials in Q4, drones and eVTOLs have a chance as well. Sometime this year, they were early this year doing extremely well. They might take some more time too. That's a nascent industry, but we could see I would say rockets already taking off. But yeah.
How about that Clarity Act making it our committee? Yep, one step forward. We'll see when it goes to the Senate. Do we think it's going to pass this summer?
No.
No? You think they're? I mean, if it doesn't pass this summer, then we get into August recess. Then we're looking at like 2027, dude.
Yeah, I just don't see the banks. It's like they're going to say all the right things, but I just think that they're not going to want to give up all that. They're not going to want to give up all of that profit. They don't want to level the playing field. They just want to give the illusion that they want to level the playing field.
Well, the thing is for the banks, though, like there's an existing loophole with the Genius bill. And so if this doesn't pass, we just continue on with the loophole intact. And then it makes their argument weaker over time that, having this loophole is going to destroy banks and lending and the financial structure of the United States of America and the world. Silly argument, made sillier as time passes, and we don't see any of that. I was going to say, before I looked this up, 60% chance that it passes, 62, that feels about right to me. That's where I'm at. If it doesn't pass this summer, I don't know if it'll pass.
Yeah. TBD. I think the next indicator should be the speed at which they bring this to the Senate floor. I mean, they have this whole push that they want to get this done in July, and I honestly thought I was going to get held up in the committee phase. So the fact that this passed 15-9 was pretty compelling. We'll see. Are they worried about China invading Taiwan? It didn't sound like Trump was really worried upon his visit. I think he said something to the effect of, I can't remember, but he basically said something that sort of dissuaded that notion. Roy, did you catch this?
No.
I'll find it. Yeah, he says, I'm not looking to travel 9,500 miles to fight a war. Discouraging Taiwan to go independent. He said this in a Fox News interview this week. So we'll see.
Yeah. Like, to give a little more context to that, one of the thoughts of him flying over was maybe there'd be essentially a trade. It's a weird way to think about it when you're talking about people and nations, but between China no longer supplying Iran anything material related to the war effort and helping things ratchet down, while the United States does the same as far as their military sales. I thought that was pretty unlikely to happen, but it was a possibility. I was hoping that it wouldn't, because it might signify weakness as far as Taiwan being invaded in the future. But I didn't catch any updated comments other than it sounded like that was not on the table at all.
Yeah. Yeah, we'll see. I really hope we don't get that, right after Iran, we get that. And by the way, also on Iran, Roy, this came out while we were on stream. Breaking news, Iran announces it will reopen its stock market on Tuesday for the first time since the war began, ending an 80-day closure. So, yeah.
Well, it worked for Russia when they opened it up.
Thoughts on ZETA? We already shared this. Rob asks, how are you guys wrestling with the NBIS versus CRWV debate? That is scary for CRWV. but they have a bigger lift from big clients. I'm only in Nebius right now. I probably don't want both.
I think Nebius is the highest quality. CoreWeave is probably the most undervalued. I'm least certain on IREN, and I don't think I'd invest in IREN personally. I don't think it's bad. But for this question, basically it's a question on whether you prefer the model of debt or you prefer the model of dilution, because you have to build that CapEx. It's not building itself. I think that the differentiation for me as far as a long-term investment and why I went with Nebius was the Neo Cloud. What they're building, I think, is going to be compelling long-term versus for CoreWeave, they're just the bare metal provider, and that's their main focus. I think that's going to be enough for the next 3 or 4 years. I think that further out, the differentiation is going to be that Neo Cloud. But short term, I could see myself in 2 weeks putting the money in Nebius that I made right into CoreWeave if the valuations are right here.
Yeah, I mean, again, like I said earlier this stream, like I think CoreWeave is undervalued, but I understand why, because of that debt, right? CapEx for Nebius is essentially all financed. I mean, there's going to be a little dilution still coming for their CapEx increase, but largely their 16 to 20 billion is all done. It's just a little bit left. The backlog here is the big discrepancy. CoreWeave 99 billion backlog, double what Nebius has, over double, and the end year run rate 18 to 19 billion versus 7 to 9 billion. Like that's a big discrepancy to have the same market cap, not to mention the connected power. Yeah, like I think if you're okay with the debt and it doesn't bother you, then I think both are going to do fine, honestly.
I might just buy some CoreWeave on Monday. I don't know.
Yeah, Tanner bought it this week, so do that with that information as well.
Yeah, I don't hate it. I'll have to do some thinking.
Yeah.
Why aren't y'all so bullish on IREN? I thought they had like a bunch of contracts with like hyperscalers.
I don't really like the crypto companies that pivot away from crypto. It can be successful. It's just hard, and there's an overhang. And I think that they might be paying for that, really through the end of the year. And they portray themselves as a Neo Cloud, and they've gotten a little bit stronger with the acquisition that they announced. But I don't think it's nearly the quality of Nebius. I don't think it's bad. Like the one thing that they have going for them is the energy. They've got that locked up. I think that they're, like of the three, I'm least excited about that, but I still think that they'll be fine long term.
They also missed their numbers. They missed their numbers, and their demand was one of the concerns, TJ, and then also like 6 billion of dilution. Like that's a ton of dilution for a company that's
they have to pay for all this build out, right? So they have a lot of, and they have to pay for it. Like the hyperscalers aren't picking up the whole tab.
I understand that, but like look at Nebius. Nebius is paying with prepayments from their customer base. So that just tells you that like, hey, these guys are way more stickier, because if I'm Meta or if I'm Microsoft, I'm willing to give them 40% upfront, while the rest of the industry is only getting 20% upfront.
Right.
So there's just better options out there, I think.
Yeah, and IREN, it's actually fallen a good bit. I wasn't paying attention to that.
It's
but
in the 40s.
It's not like it's
50s, 40s.
If it was trading at like 35, I might be more interested versus where the other names are right now. But in the mid 50s, it feels like maybe a little bit ahead of itself.
Well, my beloved Riot's been making a transition successfully because they got a deal with AMD and they increased the tranche or whatever you want to call it. And they hold a bunch of Bitcoin on the balance sheet. So they also have that potential. We get a moonshot on Bitcoin that they still, they can go up, and they're very solvent. They have a lot of cash on the balance sheet, and we've already dealt with all the freaking dilution, because for the miners, dilution was a solution, right? That's how they did it. The painful businesses, they're very hard business models. Like all of those business models, they've been undercapitalized from day one. So you go public prematurely because you need to raise capital, and obviously we're the people that help them to get to the next levels, and hopefully we can hold on long enough to see those rewards. It's tough, man. Investing is not easy.
So speaking of transition, I didn't see a question here, but do you still hold Enphase, TJ?
Yes. On a buy, hold, and hope. And then on our Uncle Danny's account, we're doing well. We had 10,000 shares at 30, and I have covered calls on them at 50. And I'm very happy to be underwater on those. I'll roll them up maybe $1 at a time because there's a real nice supply zone right here, and if it gets through it could go potentially to 100 eventually. So I would like to go on that ride, but at the same time, I'm not hesitating to. We just locked in $37,000 in premium on this last round of covered calls, so I have to put that hedge on, because just like it could go to 60, it could probably go back down to 30 real quickly if some of these new contracts fall through and stuff. So very, very bullish on Enphase. I do think it sees $100 a share here again in the next 12 to 18 months. But I cannot do anything meaningful with our core portfolio until BM&R and SOFI pan out. Like that is just the corner that I backed myself into, and you have to live with those results, you know. So I have to just be thankful for the 50K a day in theta harvest for now.
So this was one of the reasons why they're running. There's a couple other reasons. They have announced a solid state transformer.
Yeah.
You can look at their presentation or white paper. But essentially, what's happening with data centers is they're actually changing their power architecture. It's one of those reasons. One of those things, like when I'm looking at Vertiv, which is looking at like the cooling of data centers, I'm like, well, what does it look like when data centers, by and large, are running on 800 VDC, and that there's a lot more photonics and everything? All of a sudden, there's not the cooling needs that there have been historically. But I love this. I don't know enough about the individual space to be like, okay, this is the best quality product or not. But there is a reputation behind the name. But what I specifically love is there's a lot of demand in this space for something like this with data centers. This is one of those bottlenecks. So we don't have to wait around. Like I don't own Enphase anymore, but for solar to turn around necessarily, like this could be a significant product for them that brings in a lot of revenue over the near term, even as we're waiting on the long term. And they do have a commercial arm now on solar.
I
So
think they
yeah,
got a
congrats.
$42 million order or something like that as soon as they opened up the floodgates. So it's very promising.
It's very promising. So yeah, I'm not probably going to get an Enphase, you know, I'll just kind of watch it, but it got more interesting with that announcement. So
yeah, and people always like stocks after they go up some because there's like confirmation, right? Like it's just so hard. Like it's so funny because I feel like I like SoFi more now at 15 than even when it was at 4 or 5 because the fundamentals are much better, right?
Yeah, and people will love SoFi when it gets into the 30s again, but at 15 it's terrible. Noda deserves to be fired. The company's not growing or doing anything well. It's just the stock performance. We talked Nebius, but like Nebius at 70 was that. It's going to dilute forever, never make any money. Now that it's over 200, it's going to 2,000 because it's awesome.
People are coming out saying this is going to 50, not going to touch this until this goes back to 50. It's like, all right, well, sorry you didn't touch it.
Have y'all talked about Micron already? Because I just recently sold puts on Micron. I have some naked calls at 1,400. Those don't even count.
Where'd you sell puts?
So 34 days out, or it might be 33 or 32 days out now. I'm at 500, and then 60 days out, I'm at 300. My acquisition price target, like if I was going to start ownership, would be at 300.
That's wild, dude. Like you're selling puts like all the way down here, and then all the way
because I'm selling puts to make money. I'm not selling puts for the premium rush.
I'd be selling puts like up here.
Like I'm not here for cash flow. I'm here for cash stick. But it's not. I mean, I guess it's a lot if you do the dollar amount. But I did a 50 short puts at. Looking at the portfolio in the background. 50 short puts at. Where are you, Micron?
I don't think this is going to 500.
Yeah. So 33 days from now, 50 short puts at 500, 50 naked calls at 1,400. But I'm already up 51% on the naked calls. It's a 2-day-old trade, so I'll probably just take those off. And then I have 100 short puts at 350, 62 days out, and I'm thinking about increasing those 350s to 250 contracts. If it opens red on Monday, because they'll be paying more premiums. And guys, they're filling quickly. Like I'm at mid price. Like I'm not suffering a lot of slippage or anything here. Like there's a lot of people buying puts on this company, and I'm glad to sell it to them.
That's really interesting, actually. Maybe that could be a new home for my money. $500 Micron puts.
Dude, but it pays. Like those $500 Micron puts 33 days from now. I got 699 a contract, and right now they're marking for 777 a contract. Mind you, I'm on portfolio margin, so everything that I just talked about, the 5,500 puts, the 5,400, 1,400 naked calls, and the 100 short puts at 350, my capital requirement's only 166,000. So it's a very, very capital efficient trade. If I look at the extrinsic rate of return, I'm 613% annualized. So that's why
Yeah.
it's intoxicating to do what I do, because I don't think it's going to go to 550, much less 350.
Wait, so for one put on Micron, you'd be locking up $72,000, and at 533 days out, you'd get paid what, $2,000 for 2,300?
Yeah.
You're locking up 50,000 in that scenario.
No. So for 50 puts times 500, so do the math on that.
No, just do it with one for normal people.
Yeah. Well, it's gonna be
Yeah.
the same thing. So I get
50K.
$700, right?
Yeah.
But I'm not
So
tying up. But I'm not tying up 50 grand.
Yeah, it's 1.5% yield on 30 days. Not bad for a company that honestly, like, if I'm probably not going to do that, but if you're looking at Micron, you're like, I kind of missed it, but if it gets to 500, I'd love to add. If you have the money, why not write a cash liquid put and make some money?
Yeah, but the thing that's a game changer is if you have portfolio margin, right? If you have a over $175,000 account, and a lot of people do, I would get in this particular, if I just did one contract, I tie up only $1,900 to sell that put at 533 days out, and they pay me $780 up front. So now you look at the cash on cash return on that, and it's a lot higher than your 1.5% yield.
Yeah, if you shouldn't. Well, at least for most investors,
you still have to have the money to buy the shares, but Tasty Trade will look at the totality of your portfolio and be like, I know you have the money, but we're not going to earmark it just yet because we don't need to. But you have to have it there. So this is where you have to learn how to balance your checkbook, Roy. Dr. Roy, you don't get a PhD without knowing how to balance your checkbook. So I have to know how to balance my brokerage account. I just like not having to tie up all the money right away, because I wouldn't do it. Like, I wouldn't do that trade. I'm not going to tie up 50 grand for $700 for 33 days, but I'll tie up 1,900 for $700 or $800 for 33 days, knowing that I'm willing to buy them at 550. And there's a lot of people there that you can roll this thing out to 400, 300, whatever your acquisition price target is. Mine personally is 300, because I don't know enough about the stock. So I just looked at the chart and I'm like, where did it start going retarded? Around 300. Okay, that's where I'd be comfortable owning it, because that's what the market said it was worth before all of a sudden memory was the new gold.
That's fair. Shall we keep going with the questions?
Yep.
Do we sell and hold cash? Is there going to be a market dip before midterms? Macro is not looking good, is the question.
I think as long as Hormuz is resolved at some point in the next month or so, we're okay. Longer term, then yeah, there's some issue there. I probably about half of the cash that I have from the covered calls and then the sells that I've done, I'll redeploy in the market pretty quickly over the next couple of weeks. And the other half, I'm probably just going to write, like TJ, find something to put it in that's fairly low risk, or I wouldn't mind owning at a price, just make a little bit of yield on it while I'm waiting for whatever that next play is. But I always like, if I'm able to, unless there's just too many screaming buys and I need to add, and I'm not seeing that right now, have some cash on the sidelines.
Yep.
MSTR at 120 has been a pretty good place for me to park money, and it's just been working. I've been capturing 80 to 90% on my puts 30 to 45 days out. It hasn't been challenged in 3 or 4 months now.
Yeah. Yeah. Thoughts on Tim Sweeney on Steve's channel? I haven't seen this interview yet. Roy, I don't know if you've seen it. TJ, you said you saw half of it?
Yeah, I saw like 30 to, it's an hour long. I think I saw like 30 to 40 minutes of it. it's like it's post. It's like real detailed and gives you why he believes this thing's undervalued and why it's going. It's extremely optimistic on the whole stable coin thing. I don't know enough about it to speak on the whole stable coin thing. So I just stay on my lane and I maintain that my fair market value on SoFi is $25 a share.
Yeah.
Tim and I had a pretty long talk that privately, like a month or month and a half ago. So this one's new on me. He didn't mention that at the time, but I would say no, that's not. SoFi is not going to probably do that. There's a couple of reasons. One, if it's related to, and I don't know, what specifically the data is that he's referring to, but if it's anything related to their tech platform, their business clients, that's not going to happen. It's not their data to sell. And second, as far as individual consumers, people hate that these days, especially in fintechs and finance. There's a reason why, like for instance, PayPal with their mammoth amount of data, why they've not sold it externally, but instead they've actually tightened the data privacy stuff. So I think that if they did start doing that, a lot of people would actually bail on SoFi as far as using them as a product because they don't want to be the product.
Mm-hmm. We do also have NVIDIA earnings coming up this week, guys. Just saw that Wednesday after the close is NVIDIA earnings.
They're going to be
This whole earnings season has been NVIDIA earnings, and unlike last time when we were entering earnings season, I mean it really has. The last time I said it's probably not going to go anywhere as far as a stock, even with great results, because they were between a rock and a hard place with the AI narrative at the time. That narrative has been disregarded at this point by the market, and so I think that the stock is probably ready to get some more appreciation for NVIDIA. I'd say more upside by a good bit.
Yeah.
Jack asks, do you think a lot of sectors that have sold off, like SaaS and fintech, will sell off more when SpaceX IPOs? And if OpenAI or Anthropic IPO this year as well, as the money needs to come from somewhere from investors? I mean, I think that's assuming that there's a lot of overlap between the types of investors that invest in Anthropic and that invest in fintech
PayPal
and SaaS. Yeah. There could be, and absolutely, but I also think the market is largely driven by institutions and not really by retail. Especially
I wouldn't.
All these companies, SpaceX, OpenAI, Anthropic, they're all going to be over $1 trillion when they IPO.
I think that most of the retail folks that have wanted to get out of those positions already have. Could be wrong.
It's true.
How much money is sitting in money markets right now?
A lot. A lot.
I'm saying compared to the historical averages.
It's still very high, is my understanding. I can look up the exact amount for you, but it's still like we still haven't had like a full rotation from money markets over into equities. But I mean, if we have that, then yeah. But I also don't know, like the people who have money in money markets, are they just going to buy OpenAI or Anthropic? Like chances are they're institutional investors who already have a stake. Okay. Let's take a look. Roy, earpods, anything you want to plug?
Yeah, the Google Pixel Buds, the Pro 2s, really good noise canceling. I like them a lot. They work really well with the Pixel, so yeah, can recommend.
You're not an iPhone guy, Roy?
No, I'm really not an Apple guy. I did own the AirPods previously.
You own a Tesla, bro. What kind of crap is that? How could you not be Apple?
Nah. I don't want to get into it too much, but like I don't hate Apple. It just I've never really loved it. I like to be able to work on things, customize, and so forth. Apple is like, here is a product, don't mess with it.
It's for people like me.
There's a place for it. My parents love it. It's great for them. Yeah.
Are you an Apple guy, Tevis?
Yeah.
Me too.
I work in tech.
Yeah, the ecosystem is just amazing.
I haven't touched the Windows in years. There is still, TJ, 7.75 trillion in money market funds.
Crazy.
3 trillion is retail and about 4.7 is institutional.
Wow.
So just this is data as of 2 days ago. ZETA,
Go-
we talked about this.
Yeah.
Go ahead, Ray.
Well, I was going to say, going back to the question, I thought about it a little bit more as far as what might sell off in the face of a SpaceX IPO. I would look at what Korean shareholders own and have. Probably that is going to be a big shift there. They love tech. They love Elon. They love space. And so what they're holding, some of the money might come from that.
Dude,
a lot of memory stuff.
Those Koreans are frigging degens, man. Like the amount of the amount of BMNR they hold, like all the stuff that they hold, they're just complete. I love them so much. They're so risk on, just all of it as a country.
They're awesome.
Yeah.
Where did you pull the data when you said, and BlackRock increased so much and Vanguard increased so much? Like, is there a specific table where you get all of it, or do you have to source it from different?
They all filed 13F documents this week, and I have an entire website that tracks it.
That's what I'm saying. So like you have like your little agent or whatever that's going and aggregating the data for you, because I can't imagine you're thumbing through all of these yourself.
Yeah. All right. Did Bill Gates sell or the foundation? It was the Bill and Melinda Gates Foundation that sold. Do you follow Next? Yeah, we talked about Next. I'll skip this. Is there a possible market correction incoming?
Always a possibility. And the biggest catalyst is probably related to inflation driven by Strait of Hormuz. But I mean, oftentimes the corrections, I think that this is going to be the same as last summer, where it's just off to the races and the market does not care about what's happening in the macro at all this summer. Could be wrong, but it feels very reminiscent of last year.
Yeah.
About that whole, the market's going to test the new Fed. Do y'all feel like do y'all think that Kevin Warsh is a puppet or no? Like for Donald Trump, like, do you think he's going to go in there and lower rates because that's what he promised to Donald off camera? Or what?
People were talking about a rate hike last week.
You know what they're talking about, but what do you think? What do you think? Because I think he's going to lower the rates.
I think we're going to get one more rate cut this year. I know the market's not expecting one, but I think we're going to get one more. I don't know when that's going to come.
Yeah, no hikes, probably a cut. I think that the pattern that people have observed with the Fed, the problem is it's an incredibly small sample size, so you really can't overread into that. He is ultimately, even though he's the chair, just one vote on the board, and given that dot plot, it's very clear that I don't think that we're going to get a cut until very late this year, maybe December meeting.
Yeah.
If we get one earlier, it's probably really bad news.
You don't think they're going to cut just to refinance the debt?
No.
Sir Charles says, is this the time to go all in on NBIS?
Don't answer that, Toes.
I'm advised not to answer this. Sorry. KK, New versus SOFI. Which one's the better buy right now? TJ says SOFI.
New is an amazing company, though, dude. They've done an amazing job over there, but I'm team SOFI all day long.
Yeah, both are long-term winners. I think over the short term, there's a lot clearer runway for SOFI.
Yeah, agreed. When will air be attractive again? 75?
Well, I would say two things. One is related to price. I think 70 and under is attractive if you want to add a position. I'll probably re-add, or maybe I'll write a cash liquid put a little bit lower than that, like 65 or so. But the other is not tied to price at all, or at least the current price structure. I still think that it's very likely that before the end of May, there's going to be another press release related to another win that they have. Depending on which one this is, if this is related to memory or if this is related to the other hyperscaler that they don't have, that they're in the engineering qualification phase for. Either way, where it's at right now could look cheap.
Yeah.
I'm not going to speculate on it as far as like buying more, but I'm also not writing calls.
I like this comment here from Joe. It says, if you take the top 10 stocks in the S&P out, we're only at 19 times forward. So I don't think we're as overvalued as some think. And even if you put the top 10 stocks back in and you just look at the guidance that they're doing, I don't think we're that overvalued either, because we're going to have some great productivity gains as a result of AI. Thoughts on Poet? Not touching it.
Yeah. No, I don't trust the leadership. So
apparently there was something that broke on Twitter where they visited Poet offices in Toronto of all places, and they were like abandoned like WeWorks.
Oh goodness.
So I was like, I'm not. Yeah,
it's never a good sign when a company is paying investors to promote their stock. It's not. And they've done stuff since then too. It just CFO breaking the NDA. It's like, rookie mistake. Why are you doing this?
Yeah, here's the post. We visited Poet's HQ building in Toronto. We found abandoned rooms, and none of the tenants on the same floor recognized Poet.
My goodness.
So
I don't know them. Is that where they're based, or?
I mean, I didn't know either, but apparently, yeah. This is as a result. This is as part of a new short report that came out on Poet from Night Market Research. And like, see, back to the start of this podcast, like, this is the type of company you short. You don't short NVIDIA. Like, you short the company that doesn't even have offices.
Yeah, Toronto, Canada is their headquarters. I don't know.
This is an interesting short report. I'll send it to you.
I missed that.
Like, some investigative work, going into the offices and looking at the directories and stuff, and like their headquarters is just like some residential house in California. It's just like a bullshit show, man. So yeah, not touching Poet with a 100-foot pole. Did Roy invest in FIGR over Google?
I've never invested in Google. I have invested in FIGR.
There you have it. Guillermo asks, if Jane Street can manipulate the market, should institutions trust the cryptocurrent values? Look, I think the reason why it's so easy for Jane Street to manipulate Ethereum is because it's so small. And once you start building a bigger and bigger base, then the manipulation is not as easy to influence by one singular party. And as a result, you would imagine that, okay, you have a more established base. I mean, like, look at the equities manipulation, right? The main companies you see being manipulated in the market are the ones that are not in the S&P, under 50 billion market cap. Because, like, if I'm an institution, I want to be able to move the stock. That's the whole point of the manipulation. I can't manipulate NVIDIA. Like, do you know how much capital needs to move back and forth to move this thing 1 percentage point? And so I think that if institutions largely can enter any equity, it becomes harder to manipulate because the base is just bigger. Do you guys have AMD?
No, I have NVIDIA. I think it's higher quality. Good company, though, like very good company, very good CEO.
Thoughts on Figma? I talked about this a couple of pods ago. I think Claude Design completely changed my opinion on this. Staggering the amount of quality I could get with Claude Design, and it got translated directly into design files, and it got handed off to Claude with one click. I think Figma Make is a good step forward for them to adopt AI, but yeah, I was interested until I saw Claude Design, and then I tried it and I played around with Claude Design for a week, and I was just like, oh boy, I don't want to. And like, Figma went into that other pile for me. So staying away for now. How will you react when Nebius shows up with 25 billion ARR by 2027? Probably happy.
Is that your biggest win in a while, Tevis?
Yeah, I'm
Or
up
ever,
3x.
or ever? Is it ever or no?
No, not well from a dollar value, yeah. Because like my cost basis in Nebius very quickly became equivalent to my cost basis in SOFI. And because the portfolio just gets larger, right? And SOFI was like little bits of, deposits here and there for years. But with Nebius, it became like larger chunks. And so And now I'm up like, 3x on Nebius in a matter of months, and became 40% of my portfolio. So it's definitely moved.
And you're not underwater on your DGen covered call selling or anything?
I only started selling covered calls after it crossed 200.
Oh, nice.
I was selling like in the money puts, like $40.
Yeah, I remember that is your game.
Yeah. So it's my number one in terms of premiums booked, and it's also my number one in terms of gains that I'm sitting on.
Mhm.
It's completely turned around my portfolio for this year. I'm up like 40% year to date because of NBIS.
Yeah,
Nice.
but it's all it takes is that one or two, man. It's just that's the game that we play.
Exactly. So yeah, very, very happy with it. Do you know anything about an energy company, PAA?
No.
Mm-mm.
Rest of year, Nebius or SOFI next 5 years. I mean,
I think the TAM on Nebius is probably just I mean, obviously the TAM for SoFi is high too, but how much would they actually capture? I don't know, man. I'm stuck on SoFi from the standpoint that a big part of the investment thesis cracked because they're just not going to be the AWS of fintech, and that was a big part of my narrative. And this is what Anthony Noto said. These are the words that the man said that I've trusted with my entire 401k, and they're not that. They're a very, 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 very fast growing neobank. That's what they are. That's what they are. And they know how to make money like other banks don't know how to make money. The loaning platform business is amazing. Anyway, for all of those reasons, and the fact that I don't even know a damn thing about Nebius, but I know enough smart people talking about it and investing in it, I'm going to say that Nebius will probably outperform SoFi. Because I think SoFi is a solid double, maybe not more than that, a little over a double over the next 5 years. I don't know
Nebius?
what Nebius can be.
SOFI.
SoFi. So
Yeah,
I think Nebius could just do a lot more than that based on what I hear.
I think it's a lot more than a double in 5 years for SoFi. But yeah,
we'll see. We'll
I
see.
mean, a double is like $30, bro. What are you saying?
it was just there.
Yeah, no, but then double from there, you guys are put it at what, 60? Because how do y'all count doubles? You're going to say
That's a quadruple.
45?
So no, we're talking about like where it's at right now.
I hear you, but I'm just saying, like, I've been in this game longer, and I've never counted it that way. Because if you double your money from 50 to 30, to double it again, it's got to go from 30 to 60. And I get the math, but I don't really. That's not really how it feels in real life, is what I'm trying to tell you.
Yeah.
Because you're gonna be like, oh, went from 50 to 60, and it feels like a 4x, but no, it just doesn't feel that way to me. And I know that the math says that it is, but I just don't see SoFi going to 60 unless they get legit technology valuations. Like, how are they going to get there?
Yeah.
And then what's their EPS going to be? Is it going to be 60? Is it going to be 80? Because Tim said that they have to pay for other businesses or expansions, I guess, like into the big business banking and all this other stuff.
Well, they've given us 5-year targets as far as what they're expecting, and just given that, like, I think it's a pretty easy road to 60. But
and is that at 80 cents, or did I miss that they gave that they whatever the word is, they gave the vision out for more than 80 cents? Because I feel like that's where it stopped for me, or did I stop looking at the table?
Yes.
Yeah.
they didn't update it this quarter, so I'd have to go back and revisit and look. But yeah, looking at that, of course, like there might be more dilution between now and then, but it won't be at this level. Certainly, it'll be probably higher than the last leg of the dilution as well. But it'll be related to either an acquisition or to leverage for more lending. And there might be a mini shareholder revolt over that. We'll have to see. Like they messed up with that first raise that they did, but yeah.
Yeah, look, I think going back to the question, in 5 years, I would definitely go with Nebius because I think AI is going to redefine. I mean, we haven't even hit the edge of what that TAM looks like for AI. It's still expanding, especially with the agentic use cases and all the other applications in healthcare. And I mean, Nebius was mentioning on their earnings call, they were like, we're now getting clients that are in logistics, that are in healthcare, that are in all these other industries that you wouldn't even think to go after. And and they said there's like 4 clients for every GPU they bring online. Like people are climbing over each other to get access, and they're like, hey, we raised prices and we still didn't see an impact on demand. It's just a completely different, it's apples and oranges, I think. And I think Nebius is in the right space at the right time. Yes, they're $50 billion. In 10 or in 5 years, can they be 10x? Yeah, I definitely think so. I mean, why not? Right? You're going to say, oh, well, $500 billion is a really big number. Well, don't forget that in 5 years, all of these other companies are going to be double and triple what they are. Like the market's going to expand. So, I mean, we'll see what happens, but I just think that as much as SoFi executes, like where I see SoFi is maybe as a $100 stock 10 years from now, and like that's like the upper bound of what I see it to be. But for Nebius, I could see it, being much higher than it is.
Roy, where does SoFi have to go to be a top 10? Because I 10 years from now, I would see it as a top 10. So what would that market cap be? And you could put a dollar figure to the stock if we back into it that way.
For a financial or
yeah, because isn't that that's the other part of the thesis, right? Is we're going to be a top 10 financial institution by market cap. That was Anthony Noto's words.
Yeah, I've always kind of been a little bit skeptical of that.
It's like $80 for them to be top 10 by market cap, something like that, 70, 80. I think
so that is pretty substantial. I don't think that happens in 5 years, though. I could see that happening in 10 if they really, they get to like 30, 40 million members.
Well, so like it's a moving target. So I could absolutely see it, be, and I'd be a little bit surprised if it wasn't at least $60 a share, which is essentially a 4x from here over the next 5 years. But like the entire rest of fintech and finance, like Visa, MasterCard, American Express, they're going to continue to increase as well. There's some that won't, but a lot of them will. And there's some new entries in the market too. So I don't know that they ever hit that moving target, but yeah, there is material. And like end of the day, like it's still a company that's accelerating. It's growing faster and faster. It's growing over 40% year over year. Tech platform has not been part of my thesis for like 2 years. And if it's somebody's, then yeah, I could see that thesis is busted, but there's a lot that they're building. I don't know that everything is going to be working, but there's a lot of opportunity there for SoFi. And even if it doesn't, just with the loan platform business and then their lending arm as well on top of that, that's a really good business.
So the tech thesis is broken, and I know that it has been for you for a while. Then how do you feel about the present day valuation? Because it's not like that the market's not giving love to their growth if you compare them to the way they value just the other ordinary banks that don't have the same CAGR as SoFi.
I'll just pair this with Renee's question because it's the exact same one. Look, I think if you want to value them as a bank, but as a bank that's growing like 50% a year, 45% a year.
Right.
Yeah.
Like it's very simple. It's like, oh, well, tech platform. Like, yeah, sure, tech platform. But the tech platform was doing what, 12%, 13% growth. And now it's doing less than that. It's like, fine. Like, I don't think the exciting.
But is the loan, what is it called? The loan platform business? Is that the actual terminology? Yeah. But isn't that kind of techie? Because other banks don't do that, right? Yeah, they don't underwrite loans and just sell it and get a nice commission.
Sure. I mean, you could argue SoFi Invest is techie too, like the brokerage side, the crypto side, the stable coins, like the tech platform. I mean, they mentioned this on the call, like that is something that they use internally first and foremost so that they can have accelerated product launches for the B2C business. Like SoFi is using, like they want to launch new products on the SoFi brand, and they're using the tech platform to build the infrastructure for that. And that wins out over a third party wanting to launch something. If a third party wants to say to Technisys or Galileo, hey, we want to go right, but the SoFi brand goes left, then guess what? The tech platform is going to go left because it's first and foremost a service provider to the SoFi business. And secondly, only after is it a service provider to third parties as well.
Can you pull up Thomas's comment? I would love to address that comment because I have said this on my stream a million times. The other one, that one right there. It's more important to know how to make money with the stock versus learning about the stock. You're not a librarian, you're an investor. And I'm saying that with a good soul and a clean, pure heart. You guys are spending money on, you guys are spending time on the wrong stuff. I study tickers and I learn how to make money with that ticker because that's my job, is to allocate money and make money. It's not I'm not going to go take a SOFI quiz and what's their PE ratio, what's this, what's that. It's important to be extremely familiar because it's going to, whatever it takes to be comfortable so that you can invest your hard-earned money into the stock. But you got to figure out what is your path to prosperity and profitability with said ticker, because you're not the CEO, you're not the CFO, you're not the CTO, you're none of those hats. So don't expend too much energy doing that. You got to trust management to do their job and deliver the goods. That's why I hold Noto accountable. He said we're going to do X, Y, and Z. And if I trust him that they're going to do X, Y, and Z, you invest your money. If you don't trust them to execute, then don't invest your money, because at the end of the day, you're legitimately trusting management to deliver on the things that they said they were going to do on the earnings call. That's what it is in a nutshell. So I don't expend energy on, nobody's going to quiz me on, so I don't get extra points for knowing certain things. You know what I mean? Like, it's just that you own a bunch of shares, the stock goes up, you make a lot of money. You own a bunch of shares, stocks goes down, unfortunately, you lose a lot of money. That's the game that we're in.
The other thing we need to keep in mind too with SoFi is there's two very, like, they've got a bunch of green shoots that are just like new products, big business making and stuff, may or may not work out. They have two major parts of their business that are absolutely high quality and are going to absolutely do very well, but not in the current environment. But that environment is not going to last 5 or 10 years necessarily. I don't think it will. That's real estate, specifically with mortgages, and of course, everything related to mortgages, not just necessarily first lien, but also HELOCs and other products as well. And they can leverage their loan platform business on, and then student loans as well. Student loans itself, I mean, like, there's so few entries into that market. There's a lot of people that have gotten out, and for a reason, but that's been a dead business for SoFi. It won't be forever. And at some point, when that shifts, and I think both those will probably shift at the same time because they're very much tied to rates, SoFi is going to do incredibly well as a business and as a ticker. But when that comes, don't know.
Yeah. Would you guys buy CoreWeave as a swing? That's an interesting question.
I'm thinking about doing exactly that. Yes.
What would you
swing? But I would sell some out of the money puts because those premiums are pretty damn juicy on CoreWeave. But
yeah, I mean, like that's probably how I'm going to do it, is like look at it as a potential will where I'd write cash secured puts on Monday, and depending on the price action, or sometime this week. And if those fill, great, I'll write calls on the other end too.
ServiceNow, we get asked this every week. What's it at now? It's fallen even more, I think.
I don't hate it. And it's one of those names that I don't know that I'd ever own it, but I would be more interested in ServiceNow than a lot of the software as a service companies. I don't think that they're going to be like completely disrupted or go to zero or anything. I don't think there's a compelling reason to buy it, especially here over a lot of other names, even in SaaS. Like, I'd rather own Microsoft.
New Drake album. I haven't listened to that. I'm not really a Drake fan. Yeah, don't care. Not gonna listen.
But you were at the bottom. Now you're here, thanks to NBIS.
I mean, that's like OG Drake. Now Drake is like it's not interesting. But if new Kendrick,
Roy, I feel like you've never heard that song, Roy. You didn't even get a smirk out of you.
I've never heard of it. No.
Yeah, exactly. Thomas knows me. Thomas knows me.
Did they have a beef? Like, there was a beef, right, with this Kendrick guy and Drake?
Yeah, I have heard of that. Yeah.
I'm old. I don't know.
Unflappable, do you feel the dump and pump back cycle in the last few days is indicating institutions getting out of the market before a big drop? Are y'all doing any type of hedging? Good question.
Not really. I have a lot of cash that's available, so cash is kind of a hedge, at least in my mind.
It's a huge position. Cash is an important position.
Yeah. No, I'm going to have a lot of cash, especially if the NBIS stuff goes. But with Air and a couple other things that I've sold, Office of Gains. So
I bought some wings. I bought some puts on Palantir. I bought 60s for 400 days from now because I've got $40 million notional for us at $80. So we're on the hook for $40 million of Palantir at 80 if it were to drop that low. So I bought some protective wings to the downside to kind of turn that part of the trade into a put credit spread, if you will, to, just not blow up the account if all of a sudden people decided that Palantir wasn't going to grow at 80 or 90% a year. They didn't believe Alex Karp and it's not an important company anymore and all that stuff. So just did that as an insurance policy that I'm hoping not to use, but it's there in case we need it. And it was cheap. You don't want to wait to wreck your car until you buy the insurance, guys. So you're going to buy the insurance, buy it when it's the cheapest.
If you could only buy 3 stocks for the rest of 2026, what would they be?
I mean, not everybody at once. If I could only buy 3, I'll go first. I mean, I'm used to being wrong anyway. If I could buy 3 and only 3, it would be BM&R, and in this exact order, I would buy BM&R, and I would buy SOFI. And I'm kind of stuck on the third one, but it would be a total degen play because I do think that crypto is going to catch a bid around September, October, which is what all my crypto bros are telling me. So I would go total degen and I would buy BM&U. I would go total degen and buy BM&U. I could just buy those 3 and I would sell aggressive covered calls. I'm going to give you the whole playbook. I'll sell aggressive covered calls and then I will take those premiums and buy leaps. That way I wouldn't defend those calls. I can lock in a small win and either the leaps work out or don't work out, but I'm going to buy those leaps with other people's money.
FIGR is one for sure. Like that report was really good. And it's not just the headline stuff. It's like fast forward earlier to when we were talking about FIGR at I lost the bookmark, but way earlier in the earnings, not the earnings call, this call, the partners, that flow. Thank you. Like the 3 to 6 months as those partners on board, like massive revenue acceleration. Plus we're still in high interest, which isn't the worst thing. And the market doesn't fully understand what they do, how they do it, but it does associate the name with crypto, which is why I think, although it's actually performing pretty well for me, but I think that when crypto gets a rally, it will as well. Even though it's not deserved to be pulled down, it won't deserve to get the premium from that, but I think it will. Probably
to it.
It's hard, like being limited. That I'd say probably NVIDIA, just because I'd like to have more, and I don't know that there's any price that NVIDIA will hit this year where I'll really regret owning it 5 years out. And I plan to own more, and probably Robinhood in like late summer, just for what you said with crypto. Tevis?
I mean, I can't beat Tevis if I'm not shilling Nebius, so I gotta pick that for sure. I don't know, man. 3 stocks. I feel like I want a mega cap somewhere in there. Maybe Amazon. I mean, I got my shares called away for Amazon on Friday, but I still have my spreads, which is like 5% of my portfolio in spreads. So I'm happy with that. I'm out of margin officially, so happy with that too. I feel like the cop-out answer is SoFi, somewhere in there. Yeah, I don't know. I don't feel that much FOMO for NVIDIA. I don't feel that much FOMO for Meta. It's been doing nothing. Tesla, I don't feel FOMO at all. Yeah.
If I could give a fourth, it would be VG, although it ran up a lot, which annoyed me because some of that money from Air was going to go into VG, and now I'm like, I might just wait. But their earnings report was incredible, and I think that they're pretty undervalued. I think they're a pretty easy double. Well, they were at 13, so maybe a little bit less than that from here. But for this year.
TJ, what are you doing, bro? Just get in. Water's warm.
I don't have any extra monies for that right now.
Just
is Palantir still your largest position, Dr. Roy?
It hasn't been since 2024. So yeah, number one is Air Test Systems, because
Dude,
it's more
Dr.
than a
Roy's
5x for me.
Dr. Roy's largest position was like under $1 billion for like a long time. Dude, TJ with his portfolio could move Air single-handedly.
Yes.
I have no idea what that company does, but I've heard you talk about it so much.
Yeah, it's I've taken a lot of gains, so I have like 38% of my position or something like that left, and it's
wow.
Yeah,
it's insane. All right, what other stocks are you selling strangles on? Companies that you want to own, or just seduced by juicy premium?
I feel like that's geared to me. Is that me?
You can start.
Mm-hmm.
Yeah, I definitely have learned that lesson probably 4 or 5 years ago. The number one rule for me is only sell puts on stocks that you want to own, because one day you'll have to own it. So I definitely prefer that they have juicy premiums, but it has to be on a stock that I legitimately want to own, and I have to do enough homework on the stock to know at what price I would like to own that stock. Because you just can't go at it blind and be like, oh, look at this extrinsic rate of return. Oh my God, look at my cash on cash return. Oh my God, like those are not reasons to sell a put, guys. I've been in Palantir since the DPO, and after everything that they've done, my absolute, what's it called, the base case, where you feel like this is where it should be, no matter what. Like there's nobody that can convince me that they don't justify that multiple. Is I'm at $80. Like I'm like, I could go defend, if I had to be the attorney in court, and defend a $80 Palantir position based on everything that they're doing and how important the company is. $80 is where I sell that put, and that's where I stand my ground, and I go heavy. I go real heavy. If Mr. Market says no, it's 70, 60, well then obviously I have to pivot, because Mr. Market's right. My thoughts are just my thoughts. So I pick a stock that I want to own, and then I figure out the strike that I'm comfortable owning and afford it, and can afford it, and then I go from there. But ultimately, Mr. Market, make no mistake about it, he's dictating the terms of this engagement.
Yeah, I think for me, like my Amazon spreads are the biggest options position that I have on right now. I'll do strangles on, like I just had a strangle on SoFi that expired on Friday. I had 16.20, and I just bought back the 16s for like 20 cents or something on Friday. And I don't have any strangles on NBIS because I only have covered calls on there. I have strangles on BMNR. I have 36, I think, for June 18th and 17s. Yeah, I'm curious, teacher, to get your thoughts on these Amazon spreads, dude. I got 2028s.
Okay.
Okay. Hold on, let me pull it up. Yeah. Amazon 2028 spreads. I bought the 230s, sold the 280s.
So
I'm up.
Debit spread? Is that a debit spread or a credit spread? Sold the 230. Okay, got it.
I bought the 230s and I sold the 280s. And up about 30% on them right now. I don't know if I should hold them or not. Like this thing will theta decay over time, but it's so freaking slow, dude. So I don't know if I should just take the 30% and go home. Amazon's at what, 265? So I'm like in the money on them.
Yeah. Me, not financial advice, right? You and I obviously talk on a different level offline. Right now, I'm in front of however many people I got watching your channel. I'm definitely holding that all day long, though. I think Amazon has a 3 in front of it in very short order. I'm very, very bullish on Amazon. I think that Amazon's having their Google moment. Google was disrespected by the market for a long time, in my opinion. And Mr. Market has obviously agreed that they were disrespected. And I think that Amazon is going to get rewarded for front running the CapEx, right? Because they were one of the front runners for all this CapEx. And I think that they are better allocators of capital than Meta. So Amazon will get rewarded for that. They're not out there trying to build Fantasy Island metaverse. They're out there trying to do real things, you know, and they got so many verticals there. If you want to talk about the sexy robotics play, obviously AWS is finally growing at a pretty high clip as well. They're going to be the first, as Steve alerted me a couple years ago on the stream on the channel. They're going to probably be the first company in history to do $1 trillion in gross revenue. So that's going to be a very, very huge news cycle. So I think Amazon for the win. I think in 24 months, I think it might even have a 4 in front of it. So I definitely, and you're decaying so slowly, so that data burn is not really there for you. What you could do to offset the data, in my opinion, is sell some puts along the way. Keep bringing the cash register with that ticker, and you can buy yourself time to stay in that position to max out the win.
I was also thinking about like moving one of the legs over time, because like max profit for me is $50, like
Right.
280 minus 230,
Right.
and you know I bought them at about $20, let's say, so two and a half x, you know, let's say 2x for simple math is like what max profit is if I hold until 2028. And I was just thinking about the time value of locking up that much cat or that position, considering the theta decay is so slow. But if I, let's say, widen that out, you know, buy back the 280s and sell 320s or something.
Right. You can, yeah.
But I don't know.
That's definitely something you could do if you have the capital. You can ring the cash register selling 220s over and over and over and over again. Because at the end of the day, it's not so much about making money on that specific trade, it's making money on the ticker.
Yeah.
And like whenever I sell a strangle, there's always an easy side and a hard side. So as soon as I figure out what the market reveals to me, which side is where I can print, well, I'm going to go heavier on that side. I'm not going to fight the market just to prove a point, because you don't usually make money doing that. But you're in the right ticker. You're in the right horse. You just got to learn how to jockey it.
Roy, what about you? Do you have any strangles that you're selling on?
I've never done strangles, and I was thinking about it. I'm like, I don't know that I'd like actually write any. Like I do see a few opportunities,
but not even a.
I do have two vertical spreads, which is Nubank and also BMNR. So, what was your question, TJ? Sorry.
And you've never done a covered strangle where you own the shares and then you sold the puts and the calls, like where it covered completely the upside?
No, I keep it simple.
I mean, I don't know, man. Like, I think I like strangles almost more than I like just the single leg.
Yeah, strangle is way easier to comprehend than a spread. Like, I think a spread is way more tough for me that I've been doing it full time for 6 years, but I'm slow.
Well, the reason, like, I'll do covered calls and cash secured puts all day long, but then a strangle is just, I mean, mathematically, like you're like, if I like NBIS, and I would happily own more at, let's say, 100, and I would happily sell everything at 300, and we go 6 months out, I would write that all day long, because you're going to win on one side, guaranteed.
I think that there might be some misinformation on what the strangle really is, though. It's when you sell a cash secured put or a short put and a covered call and a short call for the same date. And the only difference between a covered strangle and a naked strangle is the fact that you already own the underlying. If you own the underlying, you're already covered to the upside. I have a covered strangle on SOFI, like we own the 250,000 shares, and I also have an agreement to buy the 500,000 shares at 15. But we're no longer covered to the upside because we were already up like 50% on the covered calls, so we took those off, and we're playing for the bounce, and then we'll put them on again. But you don't run the unlimited risk to the upside. That's why a covered strangle is a lot safer than a naked strangle. It's because you theoretically have an unlimited risk to both sides, but we know that SOFI is going to find a floor at 10, 11, 12 because we've been in the stock long enough. But theoretically, it could go to 0, but even Dr. Roy would agree that that's not very likely to happen. But on the upside, we don't know what could happen on a short squeeze situation. So that's why it's not advised to be naked to the upside on a stock that could potentially be coiled up, right? Yeah. And that's why when I sell naked calls, I'm very, very far out of the money. And we also have the money to turn it into a covered strangle if necessary, or I'm willing to take the loss on the naked call. I'm not going to get stubborn and roll right until I'm right, because it's a different dynamic than a covered call. Those naked calls can blow up your account, man. So please, please, please be careful. I don't want that on my head. You know, I don't want to get those emails. Oh my God, you were on Travis's channel. Like, I don't want that, because
Let me throw up the banner. This is not financial advice. I hope you guys know this. Please don't blow up your account.
Yeah, it's scary.
Shall we wrap up there, gents? It's been 2 hours and 45 minutes on this extra long Saturday stream. TJ, really appreciate you coming on and educating the folks on options in general.
Thank you guys for having this channel, man. I didn't have anything to do today, and then I look up and two of my favorite people in the YouTube world and even in the world in general, because when you have people that do what you do, it's such a needle in a haystack stuff that we do. It's awesome to be able to come in here and chop it up with you guys. Keep doing it, man. Y'all's channel is amazing. I get a lot of value out of it. Dr. Roy, man, I appreciate you, my man. You always come correct with all of the information. I appreciate Tevis, even though he's a little bit in the dumps on BM&R, like the girl that keeps cheating on him. He keeps going back because she's going to change. But he still puts out that Saturday video, even though I could tell that he just didn't want to do it this time. So I appreciate it.
He'll like it better at 35. So
she's gonna be good, man. She's gonna be good. I just don't know when. So if your time horizon is 3, 4, 5 years, I think that we'll be looking back on. You remember when everybody went on the bull run, but this particular stock decided she wanted to wait a year or two. I think that's where we're at with BM&R. Unfortunately, I think everybody's going to go from disliking Tom to liking him again in pretty short order. And the beautiful thing about the market is people forget very quickly.
Mm-hmm.
People forget very, very quickly. Tom is going to go from being somebody who don't give a crap about his predictions anymore to, oh my God, he was right. He was just off on the timing, and Mr. Market's off. And we all knew that, and it's all forgiven because everybody made a shitload of money. Yeah. So I think that's where we're at. I don't think he scammed anybody. He didn't force anybody to buy shares, guys. We all got to take ownership of our decision making here.
Yeah, we'll see. We'll see. I think there's a lot of opportunity for it to turn around through the second half of the year, but thank God I have NBIS right now, because I would be pulling my hair out at this point.
I don't have any to pull. That's the problem. I got to run, man. I appreciate you. God bless you, Roy.
Thanks, everybody.
My man, I appreciate you. Much love, guys.